All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Happy Friday to you all. Tom, thank you so much for the kind comment, man. Appreciate that so much. Absolutely love walking you guys through the process, giving you my insight on the market. So thank you for that. Ryan Hinson, good afternoon. Our Pink, Jojo, good afternoon. Sudeep, Crypto Wanderer 5813, good afternoon to all of you guys. Our Pink, Sudeep, and Crypto Wanderer, thank you for modding for me. Appreciate y'all so much. Jojo, what's up as well? And let's see, Adam Hearts, Travie Trades. Travie Trades, what's up, man? Welcome in. 2 trades a day to keep the 9 to 5 away. Yes, man. You know what? 1 trade a week could keep the 9 to 5 away if it's a proper, nice trade. Chad P, welcome in. And Tarosin, what's up to you, man? So, guys, Bitcoin is, and Quiles, what's up? Bitcoin is losing key support. We knew that we are in 2 ranges. We know that we're in 2 ranges that we're paying attention to. We have our smaller range that we've been in for a little over a month, and then our bigger range that we've been in for 2 months. And we were looking for a rejection around our anchored VWAP. There was also a naked weekly point of control up there, and it's pretty much the top of the pitchfork band. Well, after seeing some chop, we came up to our lower high resistance area, the most confluence of resistance where we expected a rejection to continue to make new lows below 62.2K. But there was a small chance, because we did break market structure, even though it was only a liquidity grab, we broke some market structure bullishly. So there was a chance that we could put in a higher low before seeing another higher high and continuing up to sweep more liquidity or even grab those highs. But we are failing to, we're losing the value area low of the range. The last couple of days, we rejected from the point of control. We've come down to the value area low. We attempted to see a bounce from the value area low, but we did not even get back up to the anchored VWAP. And now we're breaking down the value area low. And even today, after breaking down from the value area low, we bearishly backtested that value area low, and we are rejecting. So because we are bearishly backtesting after losing the value area low, and because we are rejecting on that bearish backtest, not only is it likely to take out our local lows, but it's likely that we continue down to take out our 62.2K double bottom weekend lows. If you remember, this low here was on a Saturday. And I know on the Bybit chart, our Monday low from that Monday, August 3rd, was $5 lower, but essentially it's a double bottom. And not every exchange took out that weekend low. The fact that we are losing the volume profile of this more upwards range means that we're very, very likely to come down to the value area low of our larger volume profile. And if we throw on that larger volume profile, that is going to be coming down to around $61,000. You can see that value area low is coming in. Now it's raised up a little bit. It's around 61.4. But we have some liquidity at 61,250, and we also have our golden pocket at 61K. So as we're coming down, we want to see us, first off, we'll probably see some sort of reaction from that 62.2K low. I am looking for a long if we get the swing failure pattern. But if we come up and backtest the value area low and reject on a higher time frame backtest, that's when I would expect us to come down to 61K, and then maybe we can see a nice day trade to swing trade long opportunity from 61K. Or more likely, in my opinion, is we see a trade from there, but to come up to reject and then continue down to take out our 57.7K lows. It's not looking good. It's not looking good for the bulls. We are seeing on the order flow even that throughout the day today, we've seen a lot of short positions coming in. You can see we've been dumping throughout the day. It's a majority of that is short positions, and those are new short positions. So the bears are in control, successfully pushing the price down. Now, we did see a little bit of a short squeeze to backtest that value area low. But remember, with a short squeeze, and we know it's a short squeeze because our open interest was dropping during that push to the upside. So long positions were coming in, but it was not new long positions. It was the late shorters in this zone that were getting stopped out. So after a short squeeze ends, if you do not see new money coming in to support that squeeze, to hold that squeeze up, it generally most of the time will fall right back down and take out the lows from where that squeeze started. And that is what's in progress right now. What I will say is earlier today in the Telegram, I did let you guys know that if we come up and bearishly backtest this value area low, we could get that drop to take out 62.2K. And I actually did add to a short position that I had open on the back test of that value area low, looking for a TP1 around 62.2K. And then I'm looking for maybe a final TP or a secondary TP around 61K. But it's just not looking good, guys. The bat losing the value area low. Yesterday, I talked about in the stream, it was imperative to close the daily candle back inside the volume profile or above the value area low. And you can see after we ended the stream yesterday, we were actually able to close that candle inside the value area of our smaller range, our month-long range. So there was a sign of hope. But it was a doji candle, and today we're continuing the bearish momentum to the downside. We're breaking down below the value area low, and if today's daily candle closes below the value area low, that is going to be a big sign that we're finding confirmation that the market is no longer pricing in the fair value of Bitcoin between 63.2 and between 65.2. Also, we did reject the value area high of that range on that lower high back test. And so now it's likely that we come down and make that lower low into 61K. If we pull a trend-based Fibonacci extinction and we just look at this, if we're going to see a zigzag correction to the downside, our targets for that zigzag correction, looking at this, first off, this move up looks more like a corrective move. And because this move up from 57.7 up to 67K is highly likely to be a corrective move, that means eventually we're looking to take out that 57K low, 57.7K low. But this range can extend. So if we're looking for this range to extend, we want to see some sort of zigzag corrective move down here as well. And you're going to be looking around that 61K zone for that support to hold to get back inside the volume profile of our 2-month long range. And then we want to see a decent move to the upside, starting with an impulse. In this move, you want to start with an impulse for the bulls. We're not there yet. We're still dealing with the move to the downside. And I do think it's highly likely that we're going to continue this move to the downside. We are going into the weekend. We have money flow crossing into the red on NAMI, on Market Cipher on the daily time frame. And it's already been in the red on NAMI. But the NAMI momentum wave, you can see how it's really starting to blow out here. And it looks like we're going to see continued momentum to the downside. Another thing I talked about, how on the 4-hour time frame, we were seeing the hidden bearish divergences pop up from that rejection on Tuesday. Hidden bearish divergences on the rejection from our anchored VWAP. And after seeing that hidden bearish divergence, we finally yesterday took out the low. And now, even after taking out the low, we were only able to see a move pretty much up to your secondary anchored VWAP. And we're losing the anchored VWAP from both ranges. Oop, let me get rid of this. Let me turn off our ranges real quick here. And if we look at the anchored VWAP, earlier this week, we had flipped our anchored VWAP, our bearish resistance, our downtrend anchored VWAP. We had flipped it back into resistance. We lost it on Monday. We rejected on Tuesday. We rejected on Wednesday. So it was confirmed flip of our bearish anchored VWAP back into resistance. But we were chopping in between our support anchored VWAP from 57.7K lows. Well, after yesterday, after losing that, you can see we kind of came up to try to backtest that general area of the anchored VWAP, and we're rejecting. So of course, today we're making new lows, and it's likely this momentum continues down to take out the liquidity that's below us. All right, let me check the chat here. We'll see what you guys are up to. Welcome in, everybody. Well, PA is just ass. Yeah, it's been, well, it has been, but I think that we are seeing some nice, there is some nice PA is price action as far as rejecting from technical levels. So we have to be in a scalper's mindset right now because we've been kind of squeezing within a sideways range that's been relatively boring, but there are trades to be taken and there are scalp trades to be looked at. So I would say there's always a way to find a trade in anything, any asset. You just have to use proper risk management. You just have to be looking at those smaller levels, smaller confirmations. But the main things to be looking at within sideways ranges are volume and liquidity. And we know anchored VWAPs are based off of volume, and we know volume profiles like value area low, point of control, and value area high are based off of volume. All right. Where was I at? Shogun Crypto, welcome in. Cried Surf, welcome in. Eric, you as well, man. Much love to you. All right. Jose, hello to you. Blessings to you as well, my friend. All right. How are you guys able to make money? My stop loss always gets hit. Well, Javier, if your stop loss is getting hit, you might be trying to you got to give it some breathing room, right? And you want to base your stop loss off technical like trades, right? So if you're shorting here and you got in anywhere like in this zone, you want to put your stop above that high because the plan of the trade is that you're rejecting from this resistance and you're going to drop to the downside. So your stop, if you're putting it too tight, if you're not putting it above the high, if you're putting it somewhere in here, there's always a possibility after that first drop of coming back up and kind of seeing that chop before the real drop. There is an indicator called the average true range, ATR, and that can help you because if you put that average true range indicator on, it'll kind of give you within that time frame like the so right now the average candle is about $457. So you can also use that to know, okay, if I'm shorting here, I want to put my stop up above that high. You can actually put it up to $457 above that high or a certain percentage above that high, and that'll help you not get stopped out so much. There's plenty of tutorials on how to use this ATR indicator on YouTube, so I would recommend checking that out as well. That can help you with that. All right. Listen, I think that we're going to get a big dump coming in soon, guys. I do. I really think some major volatility is going to be coming in because the reason why I'm saying major volatility is possible is because we're starting to lose this range. And we've been in this range for over a month. So when you start to see resolution of a range, you generally see big moves up or down outside of that range. Now, that doesn't mean that we're going to get small bounces along the way, right? We could get a nice little bounce from 62.2K and then see continuation of the trend. But I do think that we are going to see some follow through coming in. And then even as far as our larger range for the last 2.5 months, we're starting to see this range really mature now. And if we do not hold 61K support, which is the value area low of this range, we're going to see major volatility to the downside to come take our lows. And that being in a bear market, we know that we generally will range sideways or sideways and up, sideways and up for a bit. And then you see the big drop to the downside. So in this case, we're ranging sideways and we could see a big drop to the downside coming in. So I do think we are about to see the resolution of, today we're starting to see the resolution of this smaller upper range, but we could be in the next week or so seeing the resolution of this entire sideways range since the beginning of June. Javier made my stop loss, my entry, changed the game entirely. Let's see. Kaikui Razor, welcome in, man. Yeah, thank you so much for hitting the like button. Guys, please do hit the like button if you get any sort of insight into the market from this live stream, or if you're just enjoying the live stream, please do hit the like button. We will try to go through some live trades today, trading setups. We can go through some of the altcoins. We can go through gold. But essentially, right now, the trades that I'm looking for, I added to that short trade on the bearish backtest of our value area low earlier today. And essentially a TP1, a minimum TP1. So let me walk you guys through this. And Javier, I can kind of walk you through how you would have entered this trade, right? So we broke the value area low to the downside. After breaking it to the downside and making new lows, sweeping this low, clearly we're in bearish market structure from 65.4K, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So now the trend is your friend to the end. So we want to use that local trend to look for short positions, right? To continue the bearish momentum. Also, we knew that we were losing important volume support. And when you see a big imbalance candle go through that volume support level, now that volume is going to be flipped to resistance. And also you have a fair value gap that this created, right? There was a fair value gap that imbalance created. So a lot of times the market likes to correct those fair value gaps. And if I just turn on our fair value gap indicator, you can see there was a fair value gap here that was essentially filled with the back test of that value area low. So what you could have looked for on this trade here is you're looking to come up to bearishly backtest that value area low. Once you start to reject, you can, zoom in on lower time frames. So what I was looking at the 5-minute chart. And as we were coming up, we were coming into that value area low, rejecting. And then once we saw that kind of push down and broke market structure bearishly by taking out that low, that is when I entered the short position or added to the short position. Is when we took out this low. You can see we came down, we took out this low, and it's like, okay, now we're seeing a low time frame 5-minute bearish market structure break, because on the 5-minute we've been in a local bullish market structure. But after seeing that market structure break, you can add to it. Also, it was the back test, a bearish back test that we were rejecting from. So let's say you entered as soon as you broke market structure. You're going to enter that short position. And your plan is to make new lows, right? Because if you reject from the value area low, you're at least planning to make new local lows. Now, your stop loss, you want to put it above that high, because the trading plan is that we're rejecting from this high. We're not going to, now we're going to drop down. So if you put your stop above that high, and if your trading plan is going to be wrong, that means you're going to take out that high again. So if you're wrong, you want to get out as soon as possible. That's why your stop loss is going to go above this high, because that's a technical high of this trading plan. And then, of course, a TP1, your minimum TP1 could be looking to take out today's low. But for me, because we're also losing the value area low here, and we've seen the bearish money flow, and with our higher time frame analysis, it's highly likely we come down to take out the double bottom weekend lows at 62.2. That is when you can enter that trade, and you can see that's a 5.2 risk to reward ratio. So it is a good risk to reward ratio. And as far as your profitable trading goes, you can actually, as long as you're taking a 1-to-3 risk to reward ratio, you can actually lose 70% of your trades and only win 30% and still be profitable, as long as you're using that proper risk management and calculating your position size based off of this stop loss number. So you can see this is about 0.25% stop loss. So essentially I could 4x long my entire portfolio, and if I get stopped out, I'm only going to lose 1%. But then you're looking now, this would be in profit right now, and you'd just be looking essentially to take that down. Now, let's say that your final TP is 62.2. For me, it's not. My final TP is going to be around 61K. But let's say that your final TP is around 62.2K. You could look for a TP1 at the lows from today, because we know we're in bearish market structure, and we know that we're likely to come down to take out those lows. So after you hit your TP1, which is still a 1-to-3 risk to reward ratio, then you can move your stop loss to break even. Or, it depends on, some people do leave it. They leave it above that technical high. It depends on your trading style. But I would suggest at least taking some profit, locking some profit in. And then I like to, most of the time, protect my position by moving my stop loss back to break even. And then it's a risk-free trade. You let it ride. You let it come down to the next resistance, or take profit area. So I hope that helps a little bit there with that. All right. Divine, could you review silver? And do you see a C wave on the 4-hour to take the lows at 63.5? Wait, okay. Do you see it to take the lows at 63.5 and then mega pump? We'll look at silver. Jose, we'll look at silver in just a second, okay? Let's get through the Bitcoin analysis first real quick, and then we can look at silver. We can look at some other assets as well. I'm looking for Sol to take the 70.5K wick. We'll check Solana out as well. Why is there no volume on these drops? Well, man, first of all, when you range sideways like this, so we've been ranging sideways for about a month now, but we're also ranging sideways in a larger range for about 2.5 months. And when you start to see this, there's a lack of participation. People get, when we're not seeing big moves in the market, people tend to kind of take their attention away. And that's why volume decreases, especially in sideways ranges like this. So it's no surprise volume's a bit lower. What I will say is that we have been seeing our volume spikes on the dumps to the downside. If we look at our volume, you can see these big spikes are on dumps to the downside, especially in the last few days here. These big spikes are on dumps to the downside. Meaning bears are in control, right? In BTC, compared to the previous cycles, I see a continuation of this boring range all the way to the end of the year. Yeah, as far as the 4-year cycle goes, we're looking towards that fourth quarter, October, November, December, that kind of fourth quarter of Q4 or Q4 2026, kind of for the ending of the bear market as far as timing goes. Now, I've discussed this in my previous streams with you guys. Some of you guys that have been in here for a while, you know that I'm looking at potentially seeing this low around 57.7, or maybe just coming a little bit lower as the potential price target for the end of the bear market as well. But if that's the case, we are going to range sideways for a lot longer. We have one smaller range that we've been in for a couple months, and then we actually have a larger range that we've been in, for most of 2026. And we're looking for accumulation within these ranges, accumulation ranges. We're looking for the bullish divergences on high time frames as we're making new lows. And so that's kind of one of the scenarios that I've got going right now. Another scenario, though, is if we start to break down our big multi-cycle pitchfork, which you can see, by the way, that 62.2K low is going to be an SFP of weakened lows right into the support of the pitchfork. Super, super important back test here. If we start to lose this pitchfork support and close weekly candle bodies below the pitchfork, that is when we can see some aggressive movements to the downside, even into the low 40s, high 30s. Of course, I would expect to see some sort of decent reaction from the liquidity grab at 49K. But it's a very trying time, and I think I discussed this on Tuesday. But the fact that we're coming down to the bottom of this pitchfork, we had bullish divergences here on the daily time frame, and we had bullish divergences on the weekly time frame as we were hitting the bottom of the pitchfork. The fact that we haven't been able to break market structure bullishly by taking out that 67.3K high is somewhat of a bad sign for the bulls. We wanted to see this impulse end 1, 2, 3, 4, 5, and then we wanted to see a motive wave from here, an impulse from here. And we just are not seeing it. This move is highly likely to be a 3-wave corrective move ending in some sort of contracting diagonal here. And if that's the case, then you're likely to take out that low at 57.7 eventually. Now, if we do take out that low at 57.7, that also means we're highly likely to close a weekly candle below our pitchfork support level. And that is when we could see major volatility coming into the downside. And so that's the second scenario for me in the bear market, is that we're not going to see accumulation here. We're going to see a big dump down and come test some of our lower kind of major ranges within the bull market, or within the bear market, excuse me. And if we look at, actually, let me just do this real quick. Let's pull our volume profile of kind of this last bull market. The value area of the point of control is coming in at 39K, which happens to be our 1-to-1 trend-based Fibonacci extinction target. And so where this target comes from, that 1-to-1 trend-based Fibonacci extinction, is we're looking at a larger ABC correction. A, B, and then we would be looking for a C wave to come down to around 40K or 39K, this zone between 42 and 39. And so, yeah, that would make sense if all of this impulse is a wave 1. This move up to 67K was a wave 2, and then we're about to see a big wave 3 come in, 4, and then a 5. If we're about to see another impulse to the downside here. That is on high time frames, and that would take some time, right? If you look here, if we're just kind of drawing out what it would look like, very similar to this, you can see that it's in the middle of October, and that is projected to be when the bear market ends as far as timing goes. I would personally not like to see that. I would like to see Bitcoin hold up price here. I would like to see Bitcoin start to form accumulation here. Even if we make one more local low, we do have that value area low of our dual range. So we have our, let me go ahead and get rid of this. We have our 2024 range. This was for most of 2024, we ranged within this range. We created an all-time high around 70K, 71K, 72, 73K. And then we had for 2025, we had this upper range. I call this the all-time high range. And once we started to lose this all-time high range with a volume dump to the downside, volume increasing dump to the downside, we came back into the fair value of this range. Actually, where we bounced in February at the 60K lows was the value area low of this range. And at least on Coinbase, let me check here on Bybit or Binance. But yeah, you can see the value area low is where we bounce. Let me just make this bigger for you guys so you can see this better. You can see that value area low here where we bounced at the bottom. So we essentially, what the market was saying as far as market auction theory goes, for the year of 2024, the fair value for Bitcoin was between 60K and it was considered overvalued at 70K. It was considered undervalued at 60K, and the fair value was around 63K. Now, after some geopolitical things happened, some elections were resolved, we busted up into new levels of price discovery. And then we started to form a range in 2025. We considered a new fair value for Bitcoin in levels of price discovery, in new levels of price discovery. So you had a new fair value, right? And the fair value was essentially between, it was considered undervalued at 85K, it was considered overvalued at 110K, and it was considered fair valued around 96, 97K. But when we lost that range, when we lost this upper range with a volume dump, increasing dump to the downside, we came back to revisit the 2024 prices. So the market was now saying we no longer value Bitcoin's fair value at 2025 prices. We want to go back and revisit 2024 prices. And that's essentially what we did. We revisited the undervalued in 2024. We even chopped around and kind of rejected from the value area high at 70,000 within this little zone here. And then we essentially broke out to backtest some resistances. It was pretty much your previous low. And it was a pitchfork level. Of course, there was some technical targets up here. It was a golden pocket up there, a logarithmic golden pocket. Because this was more than a 30% dump to the downside, you needed to use the logarithmic golden pocket. But then after rejecting from that 82.8K resistance, we fell back inside your 2024 fair value. So what the market was doing was saying, we're no longer pricing in the fair value at 2025 prices. We dumped down to 2024 prices. The market was willing to buy at 2024 prices, but once we kind of came back up to backtest that 2025 fair value, the market sold off. So now the market is confirming that it no longer is accepting the fair value of Bitcoin at these higher prices of 2025. Now it is pretty much confirming that we're in the zone of 2024's fair value. We're repricing Bitcoin back to 2024 prices. But after seeing a rejection of 2025 prices, if you start to lose the fair value of your range in 2024, that's when you can see a major dump down to your smaller levels. Now, what we can look at, though, is because we spent some time, we had a fair value in 2024, a fair value in 2025, and now in 2026, we're back at 2024 prices, we can combine the two ranges, and we can form a bigger range. And that is kind of your price action of the past 2 years, two and a half years, right? So you look here, and at least on Coinbase, on Bybit, yeah, it's about $56,000. The value area low of your range is coming in at $56,000. And this is on Binance chart, but Coinbase is essentially the same thing, $56,000 value area low. You can see that for the past month, 2 months, we've been chopping around our fair value for the past 2 years. The market is in kind of a stalemate, waiting for something to happen, maybe waiting for an end to the geopolitical conflicts. But if we do continue to kind of lose this and not be able to reclaim it, eventually you're going to see that breakdown, and you're going to see that breakdown down to the value area low, or to considered undervalued price for the past 2 years for Bitcoin. So there is still a scenario where we do see accumulation in here, but that accumulation is going to be a Model 1 accumulation, a Model 1 Wyckoff accumulation instead of a Model 2. And essentially what Wyckoff accumulation is, let's think of it in terms of layman's terms, like a pattern trading. You have an inverse head and shoulder, left shoulder, head, right shoulder, and that's your bottoming reversal pattern. Essentially, all this is a Model 2 accumulation, right? Tap 1, tap 2, tap 3. That third tap is a higher low, and it's usually around the golden pocket. And then you see that expansion phase kick in. That is a Model 2 accumulation. But with a Model 1 accumulation, we see something a little bit different, and I talk about this a lot on the channel. You see your big drop to the downside, and then you kind of start to form this selling exhaustion channel that comes in here. So you have your first dump to the downside. That's your tap 1. You generally come up, you make a lower high or a semi-equal high to that first high. You see a lower low, and in any Wyckoff accumulation or distribution, your tap 2 is always deeper than your tap 1. if it's a distribution, your tap 2 is always higher than your tap 1. And then in a model 1, your tap 3 is also going to be higher than your 1 and 2. So in accumulation, what we're looking at right now is you see a move up, you generally reject from another lower high, and then you see another lower low, and that's your tap 3. But what it's doing essentially is creating that selling exhaustion channel. And that's also very nice to see. It's actually, model 1s are easier to trade because if you're seeing bullish divergences between this low and tap 1 and tap 2 and tap 3, and you see bullish divergences developing as you're hitting that third tap, if you're going to get that kind of expansion to the upside, you can long that third tap with proper confirmations, and you would be looking for the breakout, backtest, and expansion phase of that model 1. So essentially what we're looking for right now on Bitcoin is a potential model 1 accumulation within this since June, where we're going to see another new low to come down and tap that value area low, then get back inside the range and see expansion to the upside. This is a real possibility that we're seeing because we are seeing bull divs between tap 1 lows and tap 2 lows. We're seeing the daily bull divs already confirmed. So now if we do drop down to 56K and we get a quick flush down there and we make another drive of bull divs into that third tap, that could give us our selling exhaustion channel right into the value area low, where essentially we might be able to catch a nice swing long opportunity to come up and see expansion back up into like the upper levels of this range. But we have to be very careful there, because another thing that we could see, and let me just do this real quick. Let me pull a channel here. So we'll pull that channel. We'll go from the low, tap 1 low, to the tap 2 low. We're going to bring it up to that first initial high. I'm going to make this pink so it's a different color. You can see we attempted to break out of the channel. We had a bit of a failed auction up here, a failed auction breakout. We're back inside the channel, and I forgot to mention this yesterday, but if we look at once we fell back in the channel a couple days ago, we back tested that channel and it confirmed reacceptance back within the channel. So now we're confirming reacceptance back within this selling exhaustion channel. But you can see essentially the bottom of the channel is going to be coming in around the value area low. And if we do see that big volatility come in, you could see a dump all the way down to the value area low. And we might see, is if it's an aggressive dump, that a third drive of bull divs. And if you're getting the bull divs in here into a third tap, the bearish scenario is that we're still going to get a long trade from here, but you're going to come up and you're going to reject the back test of the POC, and it would also be around the back test of your pitchfork. It's also going to be the back test of that channel, and then you could see another new low come in, right? Or you can see this break down and see, instead of accumulation here, you would be seeing what's called redistribution. And what distribution is distribution is like a reversal at the top of a move. And I can give you a perfect example of that. We saw distribution right here at the beginning of 2025. We had distribution up here, you distributed down, and we had distribution up here, a model 1 distribution up here, where we had our 3 taps, tap 1, tap 2, tap 3, distribute to the downside. Now, after a dump, you can see another form of redistribution, right? Another range forming, but instead of it being accumulation, you're just, kind of getting people to long towards the top, and then you redistribute back down to the downside. So essentially, the very bearish scenario is that this range that we're seeing right now is going to be a redistribution range instead of an accumulation range. I don't want to go there yet, and we don't have enough data to be very clear on that yet. So we trade the range until it breaks. But one thing that we're seeing right now with the range, with our kind of range within the range, right? This is our range, and then we have a range within the range, and here we're seeing the range within the range starting to break to the downside, which is not a very good sign. It's not something you want to see as a bull. It really means that we can test the value area low of our larger range, which is at 61K, or we can test the range lows, which are at 57.7K. I hope that makes a little bit of sense to you guys. Let me know if that was helpful at all. Okay, where was I at here? Yeah, Javier, you're welcome, man. Are there any bullish scenarios? Yeah, of course. Jungle Bowie, there's a lot of bullish scenarios. The bullish scenario right now is that we're seeing accumulation right here. And when accumulation finishes, either it's going to be a tap three, a Model 2 where you come down to around 61K, and you can see that 60 to 61K, that is going to be around your midline. You come down to that midline, you see a higher low put in, and then you break out of this accumulation and you start to see expansion to the upside. You would see expansion up into the mid 70s or high 70s. So there is a bullish scenario. Or even if it's a Model 1, let's say this, even if it's a Model 1 accumulation and you come down to 56,000 and you take out the lows, but from 56,000, that's your third tap, you get a breakout, a back test, and then you see that expansion phase of the accumulation. Essentially, you're breaking this range to the upside with an impulsive structure. That is a very bullish scenario. And if you catch this long from this third tap and you do catch the expansion phase, you're that's like a legendary trading profit, right? So there is absolutely bullish scenarios. No yelling in the chat. Now that you mentioned the fair value gap, BTC has one from the daily from 70K to 71K. Would price go take that out? I mean, yeah, I can see that fair value gap that's coming in right here. I would say that it's not likely right now that we're going to take that out. If we start to break this range to the upside and don't see an SFP and fall, but if we can hold this and break up, then yeah, if you don't SFP your 67.3K high, it is very likely we get sucked through that fair value gap up to around 71K. But if we look at our Fibonacci golden pocket, let's go from the highs at 82.8 down to our lows at 57.8, 57.7, 57.8, and we put on our golden pocket. But first off, we want to change this golden pocket because this is a 38% drop to the downside, I believe. It was a 30% drop to the downside. And remember, when you're on the log chart, if it's more than a 30% dump to the downside or a 100% pump to the upside, you want to take that Fibonacci retracement and you want to click the setting based off log scale. It's going to shift it to its proper 61.8% retracement, which is that golden Fibonacci ratio that's ingrained into the human subconscious or human superconscious, right? Superconscious mind, subconscious mind. So you can see that's coming in around 72K, and it would kind of take out both the fair value gaps. If you look at our fair value gaps, we had that fair value gap here, and then we have a fair value gap here. So coming up to that golden pocket would wipe out both those big daily fair value gaps at 72 to 73K. And essentially the only way we're going to move up there is if we don't SFP 67.3K. But right now, we're not even in the right bias. We're not even in the right momentum to even make it up to 67.3. We're on the bias we're on the momentum for a bias to the downside. So unlikely right now, in my opinion. All right. Divine, been a quiet viewer since 2024. Learned a lot from your view on the chart. Had to appreciate the work while being drunk. Well, thank you. So, Cried Surf, I appreciate that, my man. And cheers to you. Have a drink for me, please. It's Friday. It's time to relax, to enjoy. Guys, make sure on the weekends you do take some time away from the charts to enjoy life, to have some balance in life. Get outside, enjoy nature, or spend time with family and friends. Have a drink if you want to have a drink, relax. Cried Surf, I appreciate you, my man. And thank you for quietly joining and watching, man. That's awesome. Wayne Rosi, good evening to you. Yeah, so, well, man, any bullish scenarios? Yeah, we do have the bullish scenario. I just covered that just a little bit ago. So I think you probably did see that. I'm a little bit behind in the chat. All right. Trump is speaking. We should get movement. Okay. Is he speaking about the war? Man, preparing for war. Good afternoon to you. Much love to you, my man. Just got NAMI this week. Thanks so much. Thanks so much. Do you perhaps have a tutorial video to better understand it in any specific settings you've changed? Wayne Rosi, I didn't change any settings, but actually, speaking of NAMI, I don't know if I can say yet, but there's a very, very new, exciting, major update coming soon to NAMI, which a lot of you guys in the chat ask me, which is better, Market Cipher B or NAMI? And you guys always want to, maybe you can't afford both of them, or maybe you just want to try to not spend as much money on these indicators. There is a very exciting update coming for NAMI that, let's just say, if you purchase NAMI, you'll pretty much essentially be able to kind of use Market Cypher's settings and momentum as well. So maybe I've already said too much there. I will let you guys know when I have more official word to talk on that, but very exciting updates coming to NAMI. Now, I don't know if price is going to change on NAMI with this new update. So I guess now is a good time to mention I am partnered with NAMI Trading, this momentum and money flow indicator on the bottom of your screen. And it's also got a NAMI SMC Pro version, which gives you fair value gaps and breaker blocks, you know, kind of just your main levels of interest on the chart. And then we've also got NAMI D, which essentially is like Market Cypher A, where it takes this bottom indicator and just overlays it on the chart, gives you your green dots and your red diamonds and your bearish and bullish divergences on the chart for you. So if it's all included in that lifetime package. Now, I purchased with NAMI to get you guys 50% off. So if you click my affiliate link in the description, and when you're checking out on the website, if you use discount code DIVINE50, you can get 50% off. And I think after the 50% off, it comes out to like $740 for lifetime subscription. And I know that's a lot of money to some of you guys, but let's think in terms of like, if you're a professional in a trade, like a plumber or an electrician, you invest in the proper tools to make your job easier, to make it more efficient, and to make you more money, to make you more profit, right? If you're a plumber, you invest maybe in like an electrical snake that pushes the snake into the, you know, the pipes to clean it out. Maybe it's got some blades on it to cut some tree roots and stuff like that. And it's a lot easier to do than instead of doing it by hand. It saves you time, it saves you money, it saves your energy. And you can make more money because you can get more done. So for me, these indicators that I'm purchasing in ways they're investments in order to get the proper tools to help me become better at my profession. So if you think about it like that, it's more of an investment in yourself, and it will pay itself off anyways. I'm telling you, NAMI has got me into with the bearish divergences, and especially when NAMI has money flow bearish divergences and momentum bearish divergences together at like a key resistance. I'm telling you, it works a lot of the time, and it really will pay for itself. Like as we were coming up to this 65.3, let me get back to the Coinbase chart. As we were coming up to this main resistance, which first off, you should be marking price action first, indicator second, right? So you mark out your levels of confluence by using technical analysis, and then you go to your indicators once you get to that resistance. But as we were coming up to this resistance, bear div, bear div, bear div, 3 higher highs in here. 1, 2, 3, 4, 5 lower highs in here. Money flow, bear divs as well. So as we were coming up to SFP, this key liquidity, we had the confirmation to enter the short. NAMI gave us that confirmation that this trade was far more likely to play out rather than get a small rejection and keep going. And so because I had confirmations to enter, I was able to get in at better, you know, at a better zone in here. And now you have a profitable trade. Just by using NAMI for confirmation, it gets you into trades that are more likely to play out, and it will pay for itself in time. Even if you have a smaller portfolio of like $100 to $500, I know it will take longer to pay it off, and it will take longer to get those bigger profits, but I promise you, using proper tools will make your life easier. And for me, by the way, it doesn't have to be NAMI or Market Cypher for you. It could be RSI. It could be something completely different. You could use, there's a bunch of other indicators out there. Many of them can be free, so you don't have to use the paid ones, right? Some people don't use indicators at all. They use Elliott waves and, you know, technical resistances, supports and resistances. Andy from Bitcoin Consensus doesn't use any indicators at all. He's one of the best traders I know, you know, very profitably consistently profitable. It's just based off your style. And for me, I'm a confirmation-based trader. So I like to see that extra layer of security and peace of mind when I enter the trade. All right. I don't have any tutorials yet, but I can talk to, now I want to see this update coming. I just got like beta version of it. And so I'm going to be testing that for a bit. And then maybe I'll make some tutorials on the new version of Market Cypher, not Market Cypher, of NAMI. And by the way, Wayne Rossi, since you just bought it, you will get that new version when it does update, just to let you know that. Krish Savanya, welcome in. Hello to you as well. Hey man, I have a market cipher B, but not NAMI. Is it okay if I use cipher B for entries and analysis? Absolutely, man. Market cipher B is a great indicator as well. Actually, the reason why I use both of these in conjunction is because both of them have very specific qualities that they're good at. For instance, money flow on NAMI is based off the actual money flow entering and leaving the asset. Market cipher's money flow is an algorithm of money flow and like moving averages and volume and stuff like that. But market cipher's money flow is just probably its best asset in my opinion. And it is slower. So if for scalping, it's not as good as NAMI in my opinion, but it is absolutely amazing. I love market cipher. You can see that also market cipher, higher high, higher high, higher high. Market cipher had the triple drive of bear divs. Money flow was draining out as we came up to that third high. Yeah, market cipher is just as valuable in my ways. And a lot of people ask me, which one do you think is better? And I genuinely can't give you an answer on that, you guys. I've been using market cipher a lot longer. But the real alpha for me is when I use both of them combined. So for me, what I like to see for the ultimate short setup or trade setup, it could be a long setup too. What I like to see is I like to see bear divs on momentum waves for market cipher with money flow topping out and about to roll over, because market cipher money flow is slower than NAMI's money flow. And then what I like to see on NAMI is I like to see multiple drives of bear div, because NAMI's quicker, so you're going to get more drives of bear div. And I also like to see money flow bear div. So when I have this combination of a setup, market cipher with bearish momentum waves, bearish divergence on momentum waves, money flow topping out and curving to the downside, and NAMI has multiple drives of bear div with money flow bear div, that is when those two kind of setups trigger together, those two confirmations trigger together, that is when it's a very, very high probability that the trade plays out. Now, I don't have hard statistics on it. I haven't kept hard statistics on it, but I would venture to say it's greater than 75%, 75, 85%. And I've been using that same strategy for my ultimate trade setups for about 2 years now. That is my ultimate setup. And you can see we had that ultimate setup as we were coming up to 65.4 to grab liquidity. And a liquidity grab SFP with the cherry on top, right? Preparing forward. Thank you, man. So much love to you as well. I appreciate you so much. It's good to see you in here. Guys, really quickly here, I do want to take a second to shout out the partners of the channel. So I already shouted out NAMI for you guys, NAMI Momentum and Money Flow Indicator. If you do want to purchase it, click the affiliate link and in the discount code promotion box, type in Divine50 and you can get 50% off that lifetime subscription. I do have some exchanges that I'm partnered with. The main partner of the channel is BYDFI. They're a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, or rpink did post it in the chat, you can get a minimum of 20% discounts on trading fees, and you can earn up to 40% discounts if you do deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses based off the USDT markets. So that's not just Bitcoin, but it's the altcoins as well. It's gold and silver against the USDT pairs. But just by trading on those USDT derivatives futures markets, you can earn up to 8,100 extra, real Bitcoin, real USDT paid out into your account. And in my opinion, that's a great incentive to trade on the platform. Just by doing the trades you are already going to do, you can earn extra money. And then they're offering some of the best initial deposit bonuses in the entire industry. So if you deposit $100, they'll give you a 50% deposit bonus, which is over double what most exchanges will give you on a $100 deposit. They're giving you 20% deposit bonuses up to a $1,000 deposit and 10% deposit bonuses up to a $20,000 deposit. I've also partnered with BYDFI to create that Telegram community. It's a private community, but it is free. All you need to do is join BYDFI using my affiliate link in the description and deposit a minimum deposit of $100 or more. You can deposit more if you want to get some of the bigger bonuses, but a minimum deposit of $100. That is your money. You're not paying it to me. You're not paying it to BYDFI. You're just depositing it in the exchange in hopes you will try out the exchange, like the exchange, and stick with the exchange. But once you've signed up and made the minimum deposit, you click the Telegram link in the description of this video. And in that Telegram Verify channel, type in /verify and then your user ID for BYDFI, and that'll get you into the Telegram. /verify and your user ID. I have a few other exchange partners. I have Blowfin, MEXC, and Bybit. Blowfin's a non-KYC exchange. Bybit and MEXC are KYC exchanges. All of them are offering various trading discounts on trading fees and initial sign-up bonuses as well. So links are in the description if you'd like to sign up with any of those other exchanges. Remember, all of this, guys, is a way to support the channel. It's a way to say thank you. You can also just hit the like button, subscribe to the channel, share, all that good stuff. But I just appreciate you guys being here. I'm just trying to build a good community of competent traders that are all supportive of each other. Remember, the goal is, guys, I know trading is it's a brutal game. If you're winning a trade, you're taking money away from someone else. But what I would like to develop here is a community and a group of traders that all kind of have different views and perspectives on the market, but generally know how to use risk management and trade properly. And the goal of us is to scrape money away from the market makers, right? The market makers are the one it's like the house in the casino. The house always wins. Well, generally the market makers always win. They always are, ripping off retail, scraping away from retail. So what I'm trying to build is a community of competent traders that throughout the day can talk to each other, that can kind of throw different ideas around, all working together to find those key trades where we can scrape money away from the market makers and build our own wealth individually, but doing it together as a community, kind of finding the best trades together as a community. So if you're into that, guys, join the Telegram or just continue to come to the live streams, be part of the live streams, be part of the YouTube channel. But I appreciate you guys being here so much. Okay, you explained the Model 1 and Model 2 with such ease. Thank you. Absolutely, man. You're welcome on that. And yeah, like there's a lot of technical terms. If you look up Wyckoff accumulation or distribution, there's a lot of technical terms that go with it. But essentially, if you're dumbing it down into layman's versions, it's pretty much just inverse head and shoulders for a Model 2, right? If you're looking at a Model 2, essentially it is just that bottoming reversal pattern. That's accumulation. Left shoulder, head, right shoulder, tap 1, tap 2, tap 3. Or if you're looking at a Model 1, it's essentially a selling exhaustion channel where you kind of have a tap 1, a tap 2, and a tap 3, and you're getting the bull divs between all the lows, and then you see that expansion phase kick in. So yeah, it's layman's terms, but I think that making it simple like that is the best way to also kind of look at things, right? If you can simplify it, make it easier to understand, then definitely. But isn't that a bear flag channel? So DDP Protos, no, it's not. So a bear flag generally, so it can be, but it's very unlikely, very rare. A bear flag is where you see a big dump to the downside, and then you see a rising channel. And then that rising channel tends to be a corrective move, and then the bear flag continues. And a good example of that, let me just delete these. A good example of that is what we saw earlier this year with essentially this last range, right? You had your big dump to the downside. Then you had your rising channel in here. And then you essentially reject from the top of the channel, and then you continue the bear flag to the downside, right? A big dump to the downside, continuing the bear flag. But when you see a aggressive dump to the downside followed by a descending channel, remember descending channels have like a 67 to 70% chance of breaking to the upside. That, and especially if you're seeing bull divs as you're making those lower lows, that has a bigger chance to break to the upside. So it's not necessarily essentially a bear flag. Can it sometimes break down? Yes, absolutely. Sometimes it's redistribution and it breaks down, right? But a majority of the time, a descending channel will break to the upside and an ascending channel will break to the downside. All right. Yeah, thank you, R Pink, for posting all the links in the description. I really appreciate you, my man. Okay. Too many indicators cause things to go sour. Yes, Jungle Bowie, I do understand what you're saying about too many indicators or using too many different tools. It's analysis paralysis, right? So sometimes keeping it simple in trading is good. But if you yourself use 100 different indicators, but that strategy works for you, then do it, right? Find a strategy that works for you, find indicators that work for you, and if you can get a profitably consistent strategy based off of those indicators, then use it. Now, let's say, if you trade with just like support and resistance, SR flips, and then you just trade with just order blocks and it works for you, use it, right? Whatever you can find that works for you. But generally, the simpler in trading, the better. The more you can simplify your technical analysis, the better. For me, I know some traders that trade only with Elliott waves, essentially only with Elliott waves and like volume profiles. And they're some of the best traders I know because they've mastered Elliott waves. And I think Elliott waves generally for directional bias, Elliott waves are one of the best things in the market. It has a very, very steep learning curve, and I'm still been learning Elliott waves for 2+ years, and I still would say I'm not an expert at it, but I like to take pieces, and I also am one of the only people I've ever known that has taken Elliott waves and integrated them with pitchforks. And for me, that strategy I used with Elliott waves and pitchforks was a super, super amazing strategy. Actually, it helped me catch. Let me go to the Coinbase chart. Oh, we're on the Coinbase chart. Let me go to turn off our bearish pitchfork, and I will turn on that pitchfork here. That is, let me just zoom out to the daily, and I'll turn off this guy. So essentially, if you know Elliott waves and you're looking at, you know, your pitchforks, right? I was looking, by the way, is a wave 1 here, a flat and a wave 2. Here was your big wave 3. That's when BlackRock listed the spot ETF and it got launched and it pumped up. That was your high in 2024. This was a wave 4 before seeing a wave 5 in here. And essentially what I did in order to find those targets for the top of the wave 5 is I pulled a pitchfork of your third wave, right? Your third wave is generally your longest, most explosive volume-filled move to the upside. So from the lows of 3 to the highs of 3 to the lows of 4, now I can get my targets for 5. You can also get your targets with Fibonacci extinctions, right? If you go from the high of 4 to the low of 4, and then you turn on those fifth wave targets, you can also get those. But you can see in this case, we busted past those fifth wave targets. But essentially in the beginning of 2025, I was looking for massive shorts here because we were hitting the top of the pitchfork. And also a lot of very, very expert, competent traders were looking at that range up there in January of 2025, this range right here, as a reaccumulation. They were saying, oh, this is the spring, and now we're going to get new highs being made. And I remember making a video, you can look it up on my YouTube channel, analyzing this range in depth, going over all 3 Wyckoff distribution and accumulations and reaccumulation, and pretty much saying that I expect this to dump to the downside in distribution. Multiple reasons why. Also because we were seeing bear divs and money flow draining out as the range was forming, but we were hitting the top of a major pitchfork, and also our total charts at the time, our total charts were seeing a rejection here. Let me see, where was our, I think I still have that on this. Yeah, so in this total 3 chart, I remember saying in December of 2024, and towards the beginning of 2025, I posted right up here, I'm selling my altcoins. I'm selling a lot, not all of them. I said, I'm selling at least half my altcoins here. And people were calling me crazy. They're like, Bitcoin just made new all-time highs. The altcoins are next. It's about to rotate into altcoins. But we were coming up to the top of a major pitchfork. And I said, I'm selling off here. I'll start rebuying at the midline, but this is when I'll start rebuying some of those altcoins. And sure enough, let me get rid of this channel for a second. You can see that we rejected from the top of the pitchfork, just worked your way down through the pitchfork until we got to the bottom. Also at the bottom, this label has been on my chart for at least a year, because as we were coming down there, I let you guys know, hey, it's holding, expect altcoin rally, you know, and we did get a big altcoin rally. But yeah, that's essentially pitchforks. I got off way on a tangent there. I'm sorry, guys. I don't know what I'm on today, what soapbox I'm on today. Sorry about that. Vu Manchu, it's free. Yep, Vu Manchu's like a free version of Market Cipher. Same thing as 90% as Market Cipher. Now, Vu Manchu, the money flow is not the same. And to me, the most valuable asset of Market Cipher is the money flow. So yes, if you cannot afford it, it's a great alternative, guys. It's a great alternative. Use Grok or your preferred AI to find out how to start an LLC in your state. Apply for an EIN from the Fed. Use EIN to obtain a loan from a small business administration. NAMI paid for. Well, Travie Trades, you are one smart son of a gun. And thank you for sharing that with everyone. SBA even has grants which don't have to be paid back. Not financial advice, of course. Travie, thank you so much, man. I appreciate your insight here. Awesome, man. Say it isn't so. We dropping, baby. Yeah, Liberty and Trust, much love to you. Welcome in. Happy Friday to you. I appreciate you as well, and thank you for the kind comment, my man. Trading View, Trading View. Yeah, Trading View. I like Trading View. Trading View does have some glitches and stuff like that. But guys, if we didn't have Trading View, like, man, we would have such a harder time. Imagine back in the day, like in the 30s, 40s, and 50s, when they had to calculate all this by hand. They had to calculate the golden Fibonacci ratio by hand, you know, use the math. Now we just do 2 or 3 clicks, and we got our golden pocket, you know. But they used to have to do so much of this. And I remember the Japanese were really pioneers in kind of doing technical analysis, but it took them so long to do it because they had to calculate everything manually with math and all that stuff. We actually have a really easy time trading with the new technologies that have been around. All right, let's go into silver real quick. Silver is rejecting from that resistance box. Let me go to the 2-hour chart. So we were looking for an impulse on silver overall and looking to come up to this resistance around 65, 66, looking essentially at a 1, 2, 3, you know, maybe seeing a 4th wave now, a retracement in the next week or so to come down to 2 major support levels where I will be looking for longs. You can see I have alerts set. I have an alert set on the 382. Because if we're looking for a 4th wave, you're going to pull your Fibonacci retracement from the lows of wave 3 to the highs of wave 3. You turn on that wave 4 target. You can see our wave 4 targets are there. I already have them on the chart. But essentially, we're looking for a bounce now, and you want your wave 4 to be similar in time and length to your wave 2. Doesn't have to be the same length. They can be shorter by a little bit, but if it's super short, you generally want to see symmetry in an impulse. Now, let's talk in terms of accumulation. I was just talking to you guys about Wyckoff accumulation, right? Well, look at this lower range that I have on my chart. This is kind of a perfect example of an accumulation range, right? So you have this kind of big first major low, the end of an impulse. You get a corrective retracement here. You get a tap 2. That's your always lower than your tap 1. Remember, whether it's a Model 1 or a Model 2, your tap 2 is always lower than your tap 1. And then we get a bit of a retracement up. We make a lower high. We get that 3rd move down towards your golden pocket. If you pull that Fibonacci retracement from the lows of wave 2 or the tap 2 to the highs, you turn on that golden pocket. It generally does end around the golden pocket 786 zone. But you can see that is generally our base in here. Chop around the golden pocket, and then you see expansion out. And what you also want to do with accumulation profiles, accumulation ranges, is you want to pull that volume profile of that range. And when you start to break out of the value area high, that's when it really matters. You break out, and if you can see continuation to the upside, now you know you're kind of in an expansion phase. And so you expect the trend to continue and even to get pretty bullish or pretty aggressive to the upside in expansion. Now with accumulation though, when you run into your first major resistance, like in this case, a Fibonacci golden pocket, a naked daily point of control. I believe there was your 1.618 trend-based Fibonacci extinction, which is a 3rd wave target. After seeing us hit into this rejection, in accumulation, a couple things happen. You will come back and you'll backtest your prior highs of the accumulation range, or you'll backtest the value area high of the accumulation range. Now, in the case of an impulse, we do not want to test the value area high. And I covered this in yesterday's video, so it's probably a little bit of a review to some of you guys. But for silver, we did see some bear divs as we were making these higher highs. 1, 2, 3, 4. You can see the bear divs that were forming. Money flow topped out at that the second to last high and was starting to come out. Another drive of bear divs. And then you had the money flow bear divs on NAMI forming into that resistance area. And now we're looking for a pullback for the next week or so. We're looking for a pullback, and I'm looking for the pullback. We kind of have an upper range that's forming. We can look at this sideways range up here that's forming. You had a smaller range in here for a little bit, and then this is trend and this is a trend, right? So what we can do is we can pull the volume profile of our upper range where we could be expecting some sort of correction based off hitting the 1.618, pull that sideways range. What happened today, guys? Or was it yes? Yeah, today we rejected from the value area high of the range. We're coming down to the point of control in the VWAP right now. Now, another thing we could be looking at for our wave 3 is a smaller distribution pattern, right? Like a tap 1, a tap 2, and maybe a tap 3 here, or maybe we're going to see something like this where we get impulse, correction, impulse, and we come up a little bit higher towards these highs. right? And then we reject from here and we drop down to the 382, or reject from here and drop down to the 0.5. But we can look at this range, this distribution range possibly in the making, right? And you want to see that topping reversal pattern. You can call it in layman's terms a head and shoulders pattern, right? So left shoulder, head. Is the right shoulder already formed, or are we going to get a 3-wave corrective move that comes up a little bit higher? What we can do is we can pull our golden pocket, and let me just hide now that, let me just clean this chart up a little bit. So I'll hide the purple box. We'll hide the golden pocket. We'll get rid of the naked daily because it's been tapped now. And we can hide this 1.618 trend-based Fibonacci extinction, and we'll just look at this distribution range. So is the third wave done with? Well, we did hit our 1.618 target, but it doesn't have to end at the 1.618. This could continue pushing up here. You want to see a bearish break in market structure, because in this entire move up, you saw a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So now what we're looking at in order to maybe say the third wave is done with and we're looking for a larger correction is we want to look at market structure. We want to see a bearish market structure break. So the key higher low to take out is this low right here. Did we take that out yet? Well, let's just look. I mean, it's obvious, but yes, we did, right? We broke market structure bearishly by taking out that low. So now that we've broken market structure bearishly, we could say, hey, it's maybe the third wave is done with now, and maybe we're working on a fourth wave retracement. Okay, another thing we can say is we broke market structure bearishly, so now it's more likely that we put in a lower high before making another lower low. So now we can look at resistances to the upside. Well, what are important levels? Volume levels. Here's the value area high right here. Let's also pull our golden pocket from the high to the low of our first move down. Your golden pocket right there. So a very key psychological resistance and volume-based resistance where we're rejecting from earlier today. Could we get a move up towards the 786 as well? Yes, you could, because you want to see in a corrective move, a zigzag correction, an ABC, you're going to get an impulse in A and you're going to get an impulse in C. In a WXY, it's a little bit different. It's more complex, but this does look impulsive. And if we get a corrective move down to the POC, if this POC and VWAP holds, we might get another move up towards your 786 in liquidity. We have some key liquidity resting here. And then we can also pull our naked daily and naked weekly points of controls to see if we have any naked points of controls up there, which are very, very important. No naked dailies above us. Let's look for our naked weeklies. And no naked weeklies above us. So really, the only resistance that we have left, and we might have a order block somewhere in here on lower time frames. 15-minute, we can come up here, see order blocks and fair value gaps. You can look at order blocks, fair value gaps. We really don't have anything too much up here except for that liquidity, right? So we can throw on that liquidity level. It's near your 786. We can put that on the chart. So if we do hold the point of control right now, then it is likely that we could come up and sweep up to this resistance up here. And I would actually be looking more at the liquidity rather than the 786. But the way I would take that short position, if we do see another impulsive move here, I would wait until it SFPs the short. You could short it as soon as you lose that high. But if you wanted to have a little bit more peace of mind, you could wait until we lose the 786, and then you could short it. Once you lose the 786, you put your stop above the wick, and then really we're targeting taking out those lows, but I would be targeting down to the 382, and that's a really good, short trade, right? But even the minimum target of taking out the lows is still a 6-to-1 risk to reward ratio there. So, and then let's think in terms of long positions right now. You're coming down to support right now. This does look impulsive. 1, 2, 3, 4, 5. Let me just double check something here because your third wave cannot be the shortest. So if we do this, yeah, sorry guys, our third wave would be the shortest. So we cannot classify that. We can't say this is a 1, 2, 3, 4, 5 because your third wave would be the shortest. You would have to look at zoom. You don't really want to count Elliott waves below the 15-minute time frame, but this does look impulsive. You can also just look at your volume. Is your volume increasing on that move to the upside? Actually, no, it's not. Not really. I mean, towards the end it is. But let me check our Fibonacci retracement to the downside. Okay. I don't really like the confluence we're getting there. Essentially, that's going to be your equilibrium. Yeah, we're coming down to the equilibrium right now. So that is a common target for a wave B. If you're going to look at an A, B, C, and we can also pull a trend-based Fibonacci extinction to look for our targets. Okay, that's a little bit higher than I like, but your minimum is going to be that 618, which is going to be in that zone. Okay, so do we see bull divs right now coming into the value or into the point of control and into your VWAP? You do on NAMI. And NAMI is better for scalping. You can see 3 drives of bull div on the 15-minute, but your money flow is still curving out, which is a bit dangerous here. In Market Cipher, money flow is curving out and you don't have bull divs. So let's zoom into the 5-minute and let's see if we have a trade here on the 5-minute chart. Okay, very nice bull divs. Money flow curving to the upside. Bull divs, money flow crossing into the green. So we have 15-minute bull divs on NAMI. We have 5-minute bull divs on both NAMI and Market Cipher. I just want to go to the hour real quick on the hourly chart. Ah, man. Okay, we don't see bull divs on NAMI. Actually, it's invalidating them and money flows coming out. So there's a possibility. Now, I'm not going to take this trade, but if you guys do, you know, obviously calculate your risk ahead of time, not financial advice, but if you're looking for if you're looking for this support zone to hold, what I would be waiting for is reclaiming the POC, and then I would put my stop below that 0.5. So I would long up here. My stop would go below the 0.5, and I would be targeting essentially your first targeting the highs. That's already a 5-to-1, but I would really be targeting that 786 liquidity grab, which gives you a nice little trade there. And yeah, actually though, I don't think this is going to hold. If it does, that's the trade you take. But what I can see from the highs, remember, we know that we have bearish market structure now because we broke this higher low. So because we broke market structure, we're looking for a lower high before a lower low. So the trade actually was this morning to short from here. That was the best trade, to short from right there this morning. And if we look at the initial move down, 1, 2, 3, 4, 5, this looks like some sort of contracting diagonal in here as a motive wave. So if you have a motive wave to start out your move, you're looking for a retracement up towards that golden pocket, and then we're looking for a wave 3 to the downside or a wave C to the downside. And because we're in a larger impulse, we're looking for a 4th wave correction. We're actually looking for an A, B, C to come down to the 1-to-1 or an A, B, C to come down to the 0.5. So what I would be saying is the trade this morning was to short 65.5, 65.6. And what we should be looking for now is we can pull a trend-based Fibonacci extinction from the highs of the impulse to the lows of the impulse to the highs of the correction. You're looking between the 1-to-1 and the 1.236. I actually really like this 1.236 because it's where your 0.5 Fibonacci is, and it's also where your daily level is. So, and it would take some time to get down there because remember, we want our wave 4 retracement to be similar to your wave 2. So if you shorted that golden pocket value area high this morning, good on you, man. I would keep that open. It was also an internal liquidity grab. You can see from this lower high right here, internal liquidity grab. So for me, I am expecting silver to kind of correct over the next week down to around 62.8 or like 61.6-ish into this zone. But I would be, personally, my own bias, I would be looking for longs at these zones. And as we're making that zigzag correction, impulse correction, impulse, or impulse correction, impulse, I want to see bull divs between this low and this low. So that's, yeah, I hope that makes sense to you guys. No, welcome in, my friend. Time Attack, much love to you. Thank you for being here. Thank you for modding, and it's good to see you in here. Okay, let me scroll up in the chat. I am so far behind right now. Where was I? Okay, F Trading View, that's where I was. Okay, if we continue to, it will continue to 2027. Okay, I think you mean the boringness. I hope not, but I need 10K daily candle up or down. Man, those days were those days happened a lot more pre-spot ETF. So they still do happen, though. We saw them a couple times in 2026. Mark Dutch told me there would be drinks and snacks, so I'm here. Mark Dutch, well, thank you so much. Let me give you some digital drinks and snacks, man. Picked up spot silver at 56. I was looking, now let me just zoom out on silver because we're also looking at a larger impulse, right? So on the weekly time frame, we're looking at this entire move down from the highs at 117 or 120 as a wave 4 as well. Okay? And I know this is really crappy looking. Let me go to a different chart. What silver, let's just do it. What is it? XAG USDT. Let's see if, okay, they don't have the price history. Let's go back to this chart. So I excuse this mess in here, guys, but essentially we're looking at this big pink descending channel as a wave 4. So on silver, I took profit at 117, and I remember Jason Casper was live during a live stream. I was telling him, swing short right here. Swing short, swing short, swing short. And everyone was like, you're crazy, Divine Hood. We're going parabolic right now. This is going to $200. And I said, well, wait a second. It's a major Fibonacci, trend-based Fibonacci extinction target of a third wave. Wave 1, wave 2, clearly a wave 3. Now we're looking for a pullback in a wave 4 before seeing a new high, a new all-time high in a wave 5. But the pullback in your wave 4, you want it to last, you know, similar in time to this wave 2. Now this wave 2, I think, was almost 2 years. It was, 756 days, so almost 2 years, right? Over 2 years, about 2 years, whatever. But what we can see is there also is something called the rule of alternation in Elliott waves, where if you do have a super long wave 2, you can have a shorter wave 4. But I told everyone when we were hitting here, I expect silver to pull back and down for at least the next 6 months. And it's been not quite 6 months yet. I'm not saying we're at the lows yet, but it's been what, 200 days. So yeah, 200 days or so. What I would say here is we were looking at on silver a super good swing long opportunity soon. Now, on silver, I think it was at 50. Let's pull our 382. So if we pull a 382, because remember, we're looking for our wave 4 targets. So you go from the lows of wave 3 to the highs of wave 3. By the way, it rejected at 117 because it was your 2-to-1 trend-based Fibonacci extinction. So if you pull a trend-based Fibonacci extinction from the lows of 1 to the highs of 1 to the lows of 2, you put on your 2-to-1 extinction, it was right there, and it was also hitting into a pitchfork band of a hyper bullish pitchfork. So that's why I was looking for the shorts at 117. Now, if we pull on from the, let me grab that, from the lows of wave 3 to the highs of wave 3, that is more than a 100% move to the upside. So you have to base it on log scale. And when we do that, you'll see I had some very important boxes on here. Wave 4 targets, right? And let me do based off log scale. Okay, the main target we had was $58. And if you remember, if you go back and watch my streams from back in June, middle to end of June, $58 was a major support level because it was also a naked weekly point of control. It was a naked monthly point of control. It was a weekly level or a daily level in there. And we were looking for 58 around the 382 to give us a decent bounce to the upside. Now you can see from that bounce to the upside, I know this chart is super messy, guys. Please excuse that. Let me just hide some of this. We see a very clear, what looks to be the impulse that we were just studying, right? Wave 1, wave 2, wave 3 could have just ended. We're in a small pullback in a wave 4, and then we can get a wave 5. But if this move starts with an impulse, then that's a good sign. If it turns into a corrective move, that means we're probably going to drop down further and probably come down to around $46 to $48, $47 to $48, which is your wave 5 target. It's also the bottom of the channel. By the time you get down there, you're likely to be towards the bottom of the channel, right? If you do something like this, roll over, come down, it's going to be towards the bottom of the channel. But we've hit our minimum target now at $58. That was our minimum target for the wave for weekly retracement, right? We're looking at this as a weekly impulse or even a monthly impulse to the upside. 1, 2, 3, 4, and then 5. So I did buy some spot at $58. I let you guys know ahead of time that I had a spot order at $58. If what we are now studying is this move up right now, if it's impulsive or corrective, so far it looks impulsive, right? Let's zoom into the daily time frame. So far it looks impulsive. We also kind of got that accumulation range in here that's breaking out. 1, 2, 3, we could be in the 4th wave pullback right now before seeing a 5th wave. And in that 5th wave, we kind of want to get back inside of this upper volume profile. We don't want to reject from the value area low there. Now, essentially, we already are kind of coming up into that zone. And the bearish scenario, the bigger bearish, high time frame bearish scenario is that we are going to reject from this high, because you can see it's pretty much where the value area high is. And if we roll over and we hit the golden pocket, remember the golden pocket was down at like $60 or something like that. If we hit the golden pocket of your wave 3, pulled from the lows of 3 to the highs of 3, that makes it far more likely that this was an corrective move and that we're going to come down and take out that low. But also it's likely that eventually we come down to $47, $48 because there's not a lot to hold us up in here. You know, you have some internal liquidity and liquidity in here, but essentially silver, is very, very nicely being respected on the technicals. And I bought some at 58. If we come down to 48, 47, I'll buy more because I'm expecting in some time, not right away, maybe not even in the year of 2027, but I am expecting silver to make new highs above 121. It's all-time high based off the Elliott waves on the higher time frames. All right, I know I spent a lot of time on silver there. Sorry about that, guys. Let me check Bitcoin, then we'll go to Solana. So what is she doing here? Essentially nothing. Chopping around the VWAP. But the bearish backtest and the rejection here is not a good sign. Still seeing just a decrease in open interest here. Really, some of the short positions got squeezed out here. And then this move up was not really a new positions entering. We're just seeing a bunch of positions closing out, essentially. Nothing too exciting here, nothing too much. We are in Friday. We're going into the weekend. We're probably expecting this low volume chop to continue. And for me, I'm kind of expecting this low volume chop to continue to the downside, or maybe we range sideways here and form a range underneath the value area low for Saturday, because Saturdays are very boring. They're like this. This is what a typical Saturday looks like, or even worse, right? Typical Saturday was here. Look at that Saturday last week, a couple weeks ago. If you look at the bottom of the screen, here's Friday at 11. Here's midnight. Or wait, that was noon. So Friday was Friday afternoon through Saturday. You can see that's through Saturday. And then we did make towards the end of Saturday, we made a new low, but generally Saturdays and Fridays have this very low volume kind of choppy range that forms. So I would not be surprised at all if we form a range in here for Friday and Saturday. And then we see on Sunday, where I'm at in the United States, on Sunday, other parts of the world are opening, their market opens on Monday. You know, it's Monday for them and markets are opening. So generally like halfway through the day on Sunday, you generally will see moves being made. But I would just suspect that we are going to come down and take out 62.2. On Monday, we could get a very nice long from 62.2. Or what we've been seeing a lot is weekend highs and weekend lows. That's a Saturday weekend low. This is a Sunday weekend high. maybe we are going to come down and grab that liquidity over the weekend. I have alerts set, and guys, I will let you know in the Telegram if I'm available, if I'm not sleeping, or if I'm available. I will do my best to let you know. And remember, if you want to get that alert or that notification when I post in the Telegram, just join the Telegram. It's free. All you have to do is join BYDFI using my affiliate link, deposit a minimum deposit of $100. Once you've done that, click the Telegram link and type in /verify in your user ID, and it will get you into the Telegram. But I try to do my best to let you guys know over the weekend. I give you updates on Bitcoin, primarily just Bitcoin. But if an alert goes off on an altcoin over the weekend, I will let you guys know if I'm taking a trade on that alert or not. Okay, I know I'm so far behind in the chat. Let's see here. All right. TGIF, gents. Yes, Time Attack. Much love to you, man. Thank you for being here. BNB and Tau. Yep, okay. Time Attack gets it. All right. Hey, Divine Hood, how long have you been in the financial markets? Share some of your insight on your journey. It's been about, I think I first got into crypto in 2019, but I wasn't special. Guys, I wasn't special either. So everyone, when they first get into crypto, they generally get in towards the peaks of bull markets, and they tend to buy the highs, right? So I remember in, when was it? I know that Coinbase was listed in April of 2020, right? Wasn't it April of 2020? And leading up to the Coinbase listing on the traditional markets on the New York Stock Exchange, I remember I was buying altcoins like crazy up in this, like in January, February, March, April. And then, of course, we get the big dump that happens. I didn't sell while we were up here. And then, of course, we pumped up and kind of grab liquidity before the bear market. I didn't even sell when we made new all-time highs. And now a lot of that was spot. I wasn't doing necessarily derivatives trading yet. I started getting into derivatives trading in 2020. Jason Casper and Bitcoin Hyper were my mentors. Bitcoin Hyper was my first teacher. Jason Casper, my second. I have never taken a course in my life. I've just watched YouTube streams of competent traders. I've learned bits and pieces from each one of them, and I've kind of created my own Frankenstein strategy, and just been trading really since then, you know. JRN PTRS, thank you so much, my man. I remember having you, JRP Prince. I remember having you with me in Jason Casper's community, even back in 2020, I think. XRP's at 99 cents. I believe XRP is going down to 94, guys. XRP is going to continue dropping to our macro golden pocket, our more macro golden pocket. Let me get rid of this. Yeah, it looks like, and I showed you guys yesterday, it was losing the value area low of the range. You know, we knew it. It was losing the value area low of the range. Oop. And yeah, this consolidation range here, it's likely to drop to your golden pocket. Now, by the way, though, let's look at XRP real quick here. Let's put it on our golden pocket. We'll put that based off log scale. 90 cents here. I was actually looking at the golden pocket from this low, but the big golden pocket is this. Now, let's just talk about XRP real quick. What do you see from this low, guys? Wave 1, wave 2, wave 3, wave 4, wave 5, right? Or you could say even 1, 2, 3, 4, 5, because this move here does kind of look like a 3-wave corrective move. So in other words, a flat you saw in here. But either way, so if you're pulling, maybe that's why it was at 94 cents. Let's go from this low to this high. Okay, 87, 88. But we're likely to drop to around 90 cents. Because if you have an impulse and your impulse is done, now you're looking for a correction to make a higher low, and generally you come down to the golden pocket, and then you could see a higher high come in. So around 90 cents, in my opinion, is a decent level to start nibbling spot on some XRP. Now you could continue down to the 786 though, at 61 cents. And at 61 cents, you're back in this previous range. Actually, you can even look at this whole range in here. Value area high, or if you pull the range from this range here, you can see your value area high at 65 cents, 64, 65 cents. That is a major, major support level. So you get down to the accumulation range here, you buy, you know. Not financial advice, not a financial advisor. But that's essentially XRP, and I expect XRP to keep dumping until we get down here. Now, what we are seeing with XRP, though, is we're starting to get pretty... we had some bull divs on the weekly, but they're being invalidated. Now, if we can... And look at your money flow on NAMI. Very bearish here. So I'm expecting XRP to continue dropping to around 90 cents. We could even look at a bearish pitchfork in here. Let me just get rid of these. These are no longer needed. And I believe this is Bybit. So on Binance, see, I don't know. Oh, it is 90 cents. I'm sorry. It's 90 cents that I'm looking to drop down to. We're dropping down within a channel here. We have a potential bearish pitchfork, but because we made a higher high here, it's going to be a bit different. We're going to have to put that on the original. And we're essentially chopping down within this pitchfork. If we get down to the golden pocket, and you might, depending on how quick we flush down, you might even lose that golden pocket a little bit to hit the midline. But essentially, we're losing this range. I showed you guys this yesterday. Lost the range, bearish backtest of the value area low. Because you backtested and lost that there, you expected to take out this low, but really we already took out our range lows. We didn't see much of a reaction, so you're likely to drop to your next major support level, 90 cents. Now, on XRP, though, you also can see we backtested the pitchfork band and we rejected. Rejection from the pitchfork band, rejection from the pitchfork band. We're kind of just grinding down here within this pitchfork. Bounce from the pitchfork band, tried to break above it, couldn't, lost it, backtested, lost it, backtested, lost it, backtested, coming down to the next major support level. You might even drop to the midline. Yeah, it just doesn't look good here. Impulse, correction, maybe some sort of triangle and a correction for a wave 2. This could be a wave 3 that brings you down 3, 4, 5, or you could see something like a 3, 4, 5 into the bottom of the pitchfork, midline of the pitchfork. But essentially, we're looking for an impulse to the downside on the daily time frame. 1, 2, 3, 4, 5. Solana. Solana is rejecting from our value area high, which was also a 1-to-1 trend-based Fibonacci extension target. So if you remember last week, we talked about the most dangerous area for Solana to reject, value area high and the ABC target. So if this was going to be an A, B, C, your 1-to-1 to your 1.236, right? Your 1-to-1 was at the value area high, your 1.236 right up here. We saw the perfect 3-wave corrective move, rejected from the 1.236, fell back inside the volume profile, kind of back tested that zone, and now we're dropping. So it is a bad sign that we're dropping. And if you take out this low at 72.3, then it almost 100%, not 100%, but almost 100% confirms that this was a 3-wave corrective move, and you're likely to take out this low. Now remember, I was looking for Solana to come down to 68.9 around this zone, golden pocket, naked weekly point of control. And even more bearish on Solana, unfortunately, let me just pull this volume profile real quick to current price action. Unfortunately, with this move up from $61 or $60, the first move up looks like a 3-wave corrective move. You wanted this to be an impulse, not a corrective move, not a 3-wave zigzag corrective move. You have a 3-wave here, a 3-wave here, and then this you would have to look at some sort of 3-wave with a contracting diagonal at the C wave or something. But this looks like a larger WXY correction to me. WXY, you rejected from very key resistance, anchored VWAP right here. Naked monthly point of control, you didn't quite hit it, but there was a naked weekly, I believe, in here. You grabbed some internal liquidity. Unfortunately, Solana does now have a higher probability of taking out $60. But it doesn't have to come there straight away, right? This sideways range can merge into a larger corrective range. So the fact that we saw a move up here, we grabbed some liquidity. grabbed liquidity, 77.4. That was your ultimate short because it was right into the 1.236. So the way to play this short trade would have been, you could have taken it two ways, right? You could have, as soon as you SFP this, you hit the 1.236, and as soon as you lost that high, you could have entered short on losing that high. Stop would go above that 1.236 wick, and then you would essentially be targeting the very, very first target would be the backtest of the value area high, because you could bounce from there and then continue to break out. That's still a 2.5 to 1 risk to reward ratio, which isn't the best, but it was a higher probability that this is going to break down to take out this low, right? That's a very good trade. But if you really wanted to have good peace of mind on this trade, you could have waited till it rejected from the 1.236 and then fell back inside the value area high. Then you can enter short once you once you get into the value area high. Your stop goes above that 1.236, and you're targeting taking out that low. That's still a 4 to 1 risk to reward ratio trade. And really, I'd be looking to take this down to the naked weekly, almost a 6 to 1 risk to reward ratio trade. This in here looks like we could be building some 1-2s, right? Actually, the very first move down, you can see 1, 2, 3, 4, 5, some sort of contracting diagonal. Corrective move, and this looks like a bunch of 1-2s forming. 1, 2, 1, 2. You could get that big third wave now. 4 5s, 4 5s, and this would be part of a bigger 1, 2, 3, 4, 5 to take out this low. So it looks like we could drop here. Now, if you really wanted to, you could get into the weeds with this. You could just scalp this sideways range of the past 4 hours. You're losing the value area low with a volume imbalance candle. So actually your VWAP is at the value area low. If you're not in a short trade and you're looking ultimately to take out this low and come down to 68.9, if you come up here and you reject this value area low, you could look for a short there. You could look for a short from around 75.4. Your stop would go above, for me personally, I would put it above that little wick there, or you could even put it above the POC, and you're looking to come down to take out that low. That is still a very good trade, right? So what I actually will do here, because I might be interested in taking this trade myself, I'll set an alert on that value area low. Okay, short to 68.9. And we'll see if we get that. Okay, I was looking for, what was the other altcoin that I was supposed to look at? Sorry, guys, I'm just scrolling through the chat trying to look here for some altcoins. BNB, there it was, BNB. All right, so for BNB, we're coming up to a 0.65 golden pocket. Actually, I think that's an old golden pocket. Let me see here. Yeah, it was a retracement, a bullish retracement. So essentially on BNB, we were chopping within this pitchfork. By the way, I was looking for shorts right up here. Remember, guys, if you go back, watch my live stream on Tuesday, October 14th, and watch that Friday before then. We were hitting the top of the channel. We lost the pitchfork bearishly. We were in a range. So essentially what we want to be paying attention to is this price action down here. And then even more, this small price action right here. Okay, but we're in obviously bearish market structure. 1, 2, 3, 4, or 5. Now, could the fifth wave be done with? We hit major support. Remember, I've had this green box on my chart all the way from February, and we didn't hit it until July. Could the fifth wave be done with? Let me just delete this real quick. Let me also just get rid of a lot of this because this is way old. We'll redo this. I don't keep... But your macro golden pocket retracement was from this low all the way up to this high. Your golden pocket was coming in at 641 to 616. What happened is we attempted to bounce from it. We made a lower high overall, and then we lost it. And then once you lose it, it actually turns into resistance. So now that macro golden pocket's turning into resistance, but essentially it's been, broken through and now bearishly backtested. We have this range here going back to February. We can extend it to match all of this. We are rejecting from the point of control of the range, and we have a smaller range as well, which I would be paying attention to as this sideways range. Now, in this last move from this high, because if this was a corrective move in a wave 4, we need a wave 5 now, right? Because we're looking at essentially a big impulse to the downside. 1, 2, 3, 4, 5, right? Is our 5th wave done with? Well, you can see a 1, 2. Maybe that's a 3. I would highly doubt that. Actually, what I would say is this is a 1. All of this is going to be a flat sideways 2, and then we're going to get a 3, 4, 5. You want it to be similar to your 1 and 3. Not as long as your 3, but you want it to be similar, right? 1, 2, 3, 4, and this 5. And actually, we can pull our targets for that 5th wave. We'll go from the... Let me just hide this. Oh, actually, you might say this is a 4 and this is a 5. Could be, actually. This could be a 1, 2, 3, 4, 5 here, done with. But then you're looking at this price action afterwards. I mean, you did break market structure bullishly by taking out your range highs here. But then afterwards, we took out the lows, so never mind. That doesn't matter. We took out the range lows afterwards. We want to pay attention to this, okay? And even within that, you want to pay attention to this. Kind of like Bitcoin. This is the range from June. So let's zoom in on this. You are at some macro support. You're at your 1-to-1 trend-based Fibonacci extinction, and it was a weekly level. It's also your value area low of your previous range, this previous range that you were in. So very similar to Bitcoin, this was your range from 2024, right? Actually, it's from March of 2024 to June of 2025. So almost a year and a half long range. You broke it to the upside with massive volume. Now we're back testing our 2024-2025 fair value. You can see that the point of control of the range is where we're rejecting right now, or finding some resistance right now at the point of control of the range. We've already bounced from the value area low, but we have some very key liquidity right here that was not taken into a very key psychological level of $500. We did break market structure bullishly by taking out this high, but then afterwards we broke it bearishly and we took out the lows. So the market makers are essentially playing the sideways range game where they stop out both sides and then they continue the move. So that we stopped out the shorts by coming up here. We stopped out the longs by coming down here. Now, inside this sideways range, you're looking for overall continuation of the trend. So there's a higher likelihood we continue down to sweep this liquidity. But we can pull 2 volume profiles. We can pull that volume profile here. We're starting to reject from the POC, and we can even pull a smaller volume profile here. Okay, so we have 2 things we're looking at. Obviously, if you're rejecting from the POC, if you fall back inside this volume profile, bad news, right? If you reject here and fall back inside, you're likely to come down to the lows, to the value area low. If we see a small rejection here, backtest the value area high and hold it, and then we break above the POC, you're very likely to come for this high, but you're very likely to come up to the value area high. What we can look at so far is this move a 1, 2, 3, an ABC? Is it an ABC roll over and make new lows? Or is it going to be a 1, 2, and this 3 is going to continue here? 4, 5, something like that. So we'll pull a golden pocket from the highs of the larger range to the lows of the larger range. Well, where's your golden pocket at? Let's do golden pocket. Now, we want to make sure, let me just make sure that this is more than a 30% dump. I'm pretty sure it is. That's 28%. So it's right on the cusp, guys. So you could use the log golden pocket or you can use the non-log golden pocket. I'll use the non-log because technically it is below 30%. We have our non-log golden pocket coming in at 666. Wow, interesting. Value area high coming in there. Right away, we know this is very, very important macro resistance. Okay, and then you have a fair value gap in here as well. You can see that fair value gap would be taken out right at the golden pocket or filled. You also have a fair value gap that if you don't SFP this, you're likely to get sucked up quickly. So if we do something like this, you're likely to SFP and then drop if you SFP this. But if you don't SFP that, you're going to get sucked up quickly through this fair value gap. And then you're probably going to get sucked up through the next fair value gap right into your golden pocket. So very nice levels there. B&B is actually super nice to trade, guys. But let's take our trend-based Fibonacci extension from the lows of A to the highs of A to the lows of B. And you are rejecting from that zone between the 1-to-1 and the 1.236. That is kind of scary to see that we're hitting into your point of control and your 1-to-1. If this is an ABC, you're going to take out that low. It might not happen right away, but it's highly likely that you're going to take out that low. And if you take out that low, you're probably going to see an impulse to take out 500, to grab this liquidity trail. I want to see if we see any bear divs here. No bear divs on the daily. Ooh, we did. We are seeing some bear divs, and we are seeing some money flow bear divs on the 8-hour here. And we're chopping in a ascending channel. So I can see a very nice ascending channel here. Just in this price action right in here. Okay, if you lose the channel, that means you're losing your value area high. That's when you see the big dump. So essentially right now, if over the weekend we grind down slowly and bounce from the bottom of the channel in the value area high, we could break up to 672. And it would be a third wave. It would be a 1, 2, 3. But if we lose the value area high in the channel, that is when you could see the big dump to take out the lows. So our decision point is going to be made in the next couple of days at this zone. How do we just pull back a little bit and then keep going, pull back a little bit, keep going, and then see this third wave continue all the way up to 672? Or do we lose it and then see a big impulse to take out the lows? That's going to be very interesting, and I'm actually interested in this trade. I'm going to set an alert at $600, and let's see what we get. Let's pull just to, so that trend-based Fibonacci extension from the lows to the highs to the lows. Let's look at our third wave targets, just in case it's the bullish scenario. Coming up to around 653. So we would be looking at essentially something like this, a 1, 2, 3, maybe a 4, and then a 5, and ending your fifth wave here. And then you would be looking for a pullback, but you would make a higher low, and then you'd want to see a higher high. And then at that point, you would be coming to take this. So actually, B&B is looking major decision point in progress. A, B, C down, or 1, 2, 3, 4, 5, and then, you know, more, obviously more upside, right? Key levels for shorts. This box up here. And then also obviously where we're at right now, kind of. That 1-to-1 to the 1.236. But I would say the big level was obviously your point of control, your 1-to-1 right in here. Now, I'm not going to keep that box there because I didn't have it there ahead of time, but that was your kind of resistance zone. Man, it's not looking good for the bulls, guys. Inside this ascending channel, 1, 2, 3, 4 higher highs, 1, 2, 3, 4 lower highs. Money flows draining out. Bear divs here. Money flow, bear divs, crossing into the red. Yeah, man, we might get a little bit of a move down Now let's zoom in even further and look at this move down, because we might be seeing a contracting diagonal in a wave one. This might be some sort of wave one contracting diagonal. You break up to your 786, and then you see that big move into it, and you start this with an impulse, a low time frame impulse. Can we count this as a contracting diagonal? It does look like it could be a contracting diagonal in here. You'd be looking at this as a wave one. Here's your flat in a wave two. Here's your three. Here's your four. Here's your five. Okay, so if that is done with that contracting diagonal, remember, when a contracting diagonal is done, you usually see a corrective move. And in a contracting diagonal, it usually at least goes up to this golden pocket. But when contracting diagonals, they break up pretty high. So you're actually 786 is a good level to look at. Okay, we do have some liquidity around your golden pocket, but let's throw on the 786 as well, because I actually think that 786, and yeah, it would be pretty much essentially sweeping all of this internal liquidity in here into like 616. That's also going to be another back test of your point of control, and then you could get that big third wave, 4 to 5. So I actually am interested in taking it a short from that 786 if we get up there, because of the bear dibs that we're seeing. I'll set an alert on that. It might not happen on the weekend, and we might just continue to grind. But the big back test, so the big decision is down here, whether we, continue to grind down. We might see a move up first, and then we come down here. If it's an ABC, you would get something like this. Contracting diagonal and an A wave, your B wave, and then your C wave would come down to this area, and then you would have an ABC that's done with, and then you would start with another impulse up. So this could be a good long in a bullish scenario from $600-ish. We can also look for the short from 616 down to 600. Depending on how you calculate your risk management there, it is still worth it, right? That's a relatively small move, but it could be a good risk to reward ratio. And we can actually look at that trade right now. Let's say we're going to short the 786 Fibonacci. You would put your stop below the high here, and then you'd be targeting that. It's a 4.5 to 1 or 4 to 1 risk to reward ratio short there. Okay, that is a valid trade that I would be considering taking. I have an alert set. And then we could look for, in a bullish scenario, if we come down in an ABC, we could look for a long, but you don't want to set a limit order at 600, because if it's a 3, it's going to bust straight through that. So with a long, you could look for a long from 600. Stop goes below this wick low, because you have a sideways range here above the breakout of the value area high. We can actually pull the volume profile for that as well. Yeah, you're bouncing from your value area low right now. So locally, a good trade this morning would have been to take from the value area low to look to come up to golden pocket 786, because this does look like a contracting diagonal that's done with. So now you're looking for a retracement up. Whether it's a 2 or a B, right? If it's a 2, you see a 2, and then you get the 3, 4, 5. If it's a B, you're still looking for a C. Actually, I do like this golden pocket now because our value area high is there. And let's think in terms of volume profile trading. If you bounce from the value area low and it holds, you do have a chance to come up to value area high. So actually, what I'll do on this alert here, I'm actually going to add it to the 0.618. So if we come to like 614-ish, I'll look for shorts from around 614 because your value area high is there. But we actually have some nice trade setups on BNB, and BNB is a very technical coin to trade. So thank you for pointing this out to me. And yeah, we will, Javier, we will look at taking some nice trades from here. Okay, we did XRP. XRP has the best marketing brainwashing in crypto. Well, it's not working right now, Time Attack, right? But yeah, they do have some pretty good brainwashing. Juicy Prince in the chat, yee. Used to. Okay, yeah. No, welcome in. I see that. Danger, watch yourself. Okay. Thanks, Elliot, Mr. Divine Hood. Love your waves, broski. Wick Rider Dead, thank you so much, my man. Appreciate the comment. Mark Dutch is in the house. Welcome in, Mark Dutch. Much love to you, man. Chainlink has been the first mover in the previous bull markets. It's moving now. Okay, let's check this out. Chainlink here. Chainlink is moving. Wow, interesting. And it's trying to break above the value area or the point of control. So what we want to see with Chainlink is we want to see the daily candle close above this point of control at 8, let's just say 880. Yeah, 880-ish. And we do not want to SFP this high, because if you close the daily candle below that high, it's likely you could see a drop here. One thing I don't like about Chainlink, guys, and I know we can absolutely move up to 950-ish, or this purple box up here. But the big thing I don't like with Chainlink, and it's just in terms of Elliott waves, is the very bottom, because it's a double bottom. It's not a lower low here. Actually, it's an exact low, 7001, 7001. So it's an exact double bottom here, but it's not a lower low. That is important because our initial move up was a 3-wave corrective move. That means that we could be experiencing a larger sideways range that is developing, but you wanted to, if you were going to see this as an impulse down, 1, 2, 3, 4, 5, you wanted to make another lower low like Bitcoin did. Now, because Bitcoin made another lower low, there's a real shot that this could be impulsive here. But Chainlink did not, and we have a larger range in here. Now, one thing that is bullish is that we broke back into your range, we back tested the value area low, and then we came up to the POC, okay? Then we back tested the value area low again, and we're holding it, and now we're breaking above the POC. So it's actually likely locally that Chainlink comes up to the value area high. Naked monthly point of control, value area high, 6,945. But I wouldn't be looking for too much. It's also your golden pocket, pulled from the lows, from the highs to the lows. Very macro resistance up at 9, this box between 940 and 960. And I'm not sure why 960. There might be a daily level up there or something. No daily level. Let's see. Is it a weekly level? No, weekly level. Is it a naked weekly point of control? No naked weeklies there. Is it a naked daily there? Huh. Okay, I do not know why that box is going that high. Maybe I was just throwing it on real quick. But I would say our zone then is between 951.4 or like 952, let's say 940 to 952 is a big zone of resistance. Yeah, and so we have two ranges. We have this bigger range going back to February, and then we have our smaller range, which we're breaking out of right now. This is our smaller range. Let's pull the volume profile for that smaller range. It looks like we're breaking out of the value area high of that range. Actually, look at this. This is very nice bullishly, very nice locally bullishly, because you broke out of the value area high, you back tested it, and we're continuing higher. We're continuing to break above the POC. So, and this could be a 1, 2, and we're in the third wave. We could get a 4 and then a 5 coming up into this. And this could be a larger A, B, C. What we want to look at is the wave 3 target real quick. So if we go here, put on our 1.618. Okay, we're coming up to that right now. Actually, we just hit it. So we're hitting our wave 3 target. So we could see a pullback, guys. We could see a pullback in a wave 4. So then essentially what we want to look at is pulling our wave 4 targets. Okay, look at where your wave 4 targets are. 382 to 0.5. I like that 382 because it does look like we could see a pullback over the weekend to backtest our value area high, and then we see a move up to here. So we could be looking for a long. Stop would go below wherever, maybe that wick there, or you would have to see if this comes down to wick that out first. But you could be looking for a long, essentially, if you pierce below the 382 to grab liquidity of this low. And then if you reclaim the 382, that's when you could enter a long position. As soon as you reclaim the 382, your stop would go below wherever the wick went. And essentially you would be looking to target that resistance above golden pocket, naked monthly point of control, excuse me, value area high. Very nice scalp trade, short, long trade. But then I am going to be looking for shorts up here, guys. Man, even within this, okay, I actually do see one thing a little bit concerning here. If this is a wave 1, I can't really count a 5-wave move here. That looks like a 3-wave move. You could zoom in maybe on lower time frames and maybe there's a little 2 in here, 3, 4, 5, but you want this to be an impulse to start a wave 1. Yeah, I mean, it's pushing it. It's really, really pushing it, guys. But you could say 1, 2, 3, 4, 5. I mean, that's really forcing it with a small ass wave 2 like this. But in order to classify this bigger move up as a impulse, you would have to do that because this essentially has to be an impulse in a wave 1, a wave 2, a wave 3, 4, and then a 5, right? But yeah, Mark, it is breaking out of the POC of the range, or breaking above the POC of our 5-month long range, going back to February, and it's breaking out of our 2-month long range and flipping it to support locally. When was that? That was earlier. We flipped it to support on Wednesday. Breakout on Tuesday, flip to support on Wednesday, and now we're continuing up to the 1.618. I would not be surprised if we see a pullback from where we're at right now, because it is your 1.618 trend-based Fibonacci extinction. And if we are going to pull back, then I would want to see the pullback. I would really want to bounce from the 382. I wouldn't want to hit the 0.5 just because your value area high is there and liquidity. You know, sure, you can take the liquidity. So we could look at our local, very local support for a long up to 940-ish, 945-ish. Very local support is this. And that's where we could look for a long. I'm going to set an alert on the 382 right now. If we get that over the weekend, guys, and it looks like we're seeing a low volume corrective move down here, then I'll let you guys know. We are seeing some bear divs. Money flow looks very bullish, though, on both Market Cipher and NAMI. And remember, the third wave doesn't have to end at the 1.618. It's a common target, but it doesn't have to end there. So we could continue breaking this up in a wave 3, a little bit higher, and then see a 4 and a 5. We have some internal liquidity. Maybe our wave 3 is going to grab this. So maybe the wave 3 will do something like a 1, 2, 3, 4, 5, something like that. But essentially, guys, I am nervous about Chainlink truly breaking out because the first move up looks corrective. And we have an exact double bottom here, an exact double bottom, followed by a bottom that's at 0.36, you know. Okay, let me read what you're saying, Mark, here. Yeah, thank you so much, Mark, for posting the Telegram in the chat. Remember, guys, if you do want to get these alerts that I set alerts on a bunch of trading setups through the live streams. But a lot of time these trades don't trigger while I'm live. So if you want to get my notifications on if I'm entering the trade or not, really the only way is to join the live the Telegram. And the Telegram, in order to join the Telegram, you have to sign up with BYDFI because I'm partnered with BYDFI. They're running the Telegram. It's a partnership thing. Unfortunately, none of the other exchanges are involved, so it's just me and BYDFI. That's why they're the main partner of the channel. But if you sign up with BYDFI and deposit a minimum deposit of $100, that's your money. You're not paying it to me. You're not paying it to BYDFI. You're just depositing it in the exchange in hopes that you will try out the exchange, like the exchange, and use it. Also, guys, I think it's a win-win for everyone because you guys get discounts on trading fees. You can earn extra money based off the volume you trade on the USDT markets, up to $8,100 extra. You can get extra deposit bonuses, and you get access to the Telegram and my alerts and my notifications. I don't want to call them signals, but my trading setups and if I'm taking trades or not. I also try to let you know what Bitcoin's doing throughout the day, throughout the weekend. And for me, I'm very open and honest with you guys. What I get out of this is if you sign up using my affiliate link, I just get a percentage of your trading fees that you would pay to the exchange anyways, whether that's BYDFI or any other exchange. You just get a percentage of those trading fees that you would already be giving. So it's no more expensive for you at all. And there's a lot of benefits for you guys, in my opinion. Okay. Let's see here. Montenegro, man. Welcome in from Montenegro. Good evening, Mark. Is your traveling going well, man? It's been a while since we've seen you in here, but I'm sure you're real busy traveling, enjoying life. All right. Verify backlash wank. There you go. That's a better one. All right. All right. We'll go through, what is this? SKHYNIX. What was it? Where was that? SKHYNIX. Wow. I don't know if this is the proper coin. I know you said it's a Korean stock, but it looks like it might be tokenized. But this is essentially a really nice descending channel that you were seeing on the chart. If I can get it, you're breaking out of that descending channel. Now, you haven't broken market structure bullishly yet, but from the lows, you could be looking at some sort of ABC here where you're going to continue down, or you could be looking at a 1, 2, and this is going to continue up, and you're going to break market structure bullishly. Have we broken market structure bullishly is the question. Yeah, we have. Well, it's an SFP right now, but you have technically made a higher high now. Ooh, another thing I don't like, though, guys, is this does look like a 3-wave move here. And remember, if you're starting a larger impulse, you need that wave 1 to be an impulse. You need that wave 1 to be a motive wave. So a motive wave meaning a contracting diagonal, a double 1-2 impulse, or a multiple 1-2 impulse, or a single impulse, but you need it to be some sort of motive wave here. You cannot have it be a 3-wave corrective move, a 3-wave move. Because that does look like a 3-wave move, we would have to be looking at some sort of W, X, and then we would be looking for some sort of 3-wave corrective move in a Y here, and then you're looking to roll over and take out that low. But I would be just trading the sideways range. So from that low, you kind of have this sideways profile that's developing. Yeah, you're breaking out of the value area high. So we just SFP'd this. You do not want to fall back inside your volume profile, because if you SFP that and fall back inside, you're likely to at least move to the POC, but you're probably going to move to the value area low. If you hold it and then continue, then you're likely to probably sweep all of this liquidity in here. We got the thunder rolling in again, guys. So if I go down out of nowhere, you know why. My power is going to go out again. So we'll do the 382. We want to put that based off log scale. Okay, we are hitting the 382 as well. Okay, this is, remember, the 382 acts as strong resistance in a strong trend. Well, I would say this is a strong trend to the downside. So now, are we seeing just a three-wave corrective move here to grab liquidity into your 382 and then roll over? And that could be also, we could be forming a larger flat, a W, X, Y, in a, or an ABC in a wave one, then you get some sort of flat here, right? A larger flat. You're at resistance. You're at your 382 resistance. You're grabbing liquidity. So if you fall back inside your volume profile, it's bearish. If you can hold the volume profile and truly break out here, you have a real chance of coming up higher. You have a weekly level coming up. But yeah, essentially what I would just be watching for is right now locally, you want to back test pretty much 1150 and hold it. If you do, you have a chance of coming up to make new highs. If you don't, you're probably going to drop down and take out the lows at 976 and eventually come take out your overall lows at 884. Okay, let's see. Can you check coin? Yes, Dr. X, welcome in, my friend. Coin. Let's get rid of some of this. Well, man, coin is in a sideways range since February as well. We're in the sideways range. We're coming down to the value area low. What I would say here on coin, this does not look very bullish. That looks like a corrective move before coming lower and making new lows. Now we had the liquidity. We took liquidity. And could we say that this was an impulse? A 1, 2, 3, 4, 5. Coming up, we took liquidity here. So we have a smaller range also developing, just like Bitcoin, just like a lot of these coins, a bigger range and a smaller range. I would pull the volume profile of this smaller range. Okay, we're at the POC right now. And the value area high of your larger range, or of your smaller range, is going to be the POC of your larger range. So that's important volume resistance. I bet you that's going to be where your golden pocket is as well. Right around there. Yeah. Resistance here. Maybe even coming up a little bit higher where your 786 is as well. You have a naked daily point of control at the point of control. And it might be a naked weekly as well. Yeah, you have a naked weekly there. So very important volume resistance at around 163. You have value area high, point of control, naked weekly point of control, naked daily point of control, and your golden pockets just above that. Now you did technically grab the lows here, right? Because your initial low was 139.36. Your secondary low was just barely lower, but it's 139.18. So only like what, 20 cents, 10 cents lower. And then let's look at that third low. Is that lower? And then you have 139.11. So it was 7 cents lower. But essentially you have a triple bottom here. Because let's be real, people that set stop losses, they're not setting them 20-cent stop losses, 30-cent stop losses. So we have a lot of liquidity that is building up below these lows, a lot. We just grabbed some liquidity from some highs. Like I said, there is a way to look at this as an impulse, a 1, 2, 3, 4, 5. But it's more likely, if we're not forcing this, it looks like it's a corrective move. And so now we could be looking for that impulse down. 1, 2, 3, 4, 5. And you would want to take out these triple bottom lows. Money flow is starting to leave again on NAMI here. And if we do get another drop down to take out those lows, we could develop some nice bull divs continuing on the daily time frame in here. So actually what I want to do is I want to set an alert on that low at 139.11, because if we continue to have bull divs as we're coming down there, I would be looking to buy some, maybe even. Only if you get the SFP. If you don't get the SFP, you don't buy. Yeah, because if we don't SFP that and hold, because you can see we have an upper range in here. This is your upper range. And if you don't hold that, you're likely to bust through all of this. I mean, you might see a liquidity grab at this low, but you're likely to come down into this range. And obviously your golden pocket's at 86. So we have some liquidity at 114.5 that you might come down and you might see a move from that. But yeah, we are at the value area low of our range that goes back to December of 2023. So almost 3-year long range, 2.5 to 3 year long range, with some bull divs forming if we take out another low. Technically, these are lower lows. So you have a low, a lower low, a lower low, but just by pennies. And you want to see a nice wick down there to truly grab that liquidity. Now, in the overall grand scheme of things, you're at your value area low of your almost 3-year long range. You do have bull divs, but money flow, look how bearish money flow looks. And remember, bearish money flow will a majority and almost all the time overpower a single drive of bull divs. You do have bull divs here, you do have bull divs here, but money flow is bearish. So what I would want to see personally for me is to take out the lows one more time. And if you can take those out and you can get another local drive of weekly bull divs, and then you have your regional weekly bull divs, and by then, hopefully your money flow is starting to curve and round to the upside and curve and round to the upside. Because if we don't SFP this, you're going to come down and at least grab this. But it doesn't look the worst here, guys. It doesn't look the worst. Okay, I got to go soon, but let me look at hype. We looked at hype yesterday. Hype came down to your value area low and your golden pocket, or your range lows and your golden pocket. We got a bit of a move from there. Remember, that was that golden pocket that we front ran with this low. Came down, bounced. We grabbed liquidity from a high yesterday, and that, unfortunately, that means that we could be in a ABC, and now you're going to dump down and continue lower here, or at least take out this low. In a bullish scenario, now we would have to say that this is a 1, 2, 1, 2, and then you're going to see an explosion up. And you do kind of have that nice curvature you like to see in the double 1, 2s. But overall, you could be looking at this as a fourth wave corrective move, right? 1, 2, 3, 4, and then another low and a 5. I understand that we only made it to the 1.236. If you look at your correction targets, the 1.236 was here. So a wave 3, it generally goes to the 1.618 or longer. So this could be an A, B, C. You're bouncing from your zone of a golden pocket, your 1.236, grabbing range low liquidity. And if you can get back inside this volume profile, you need to get back inside though. And we tried here, we couldn't. We tried here, we couldn't. We just came into it to grab liquidity. So the big key thing for hype is you want to start getting back inside the value area low, which is resting at like 56.6. You want to close a daily candle above. Now, we do have our 382 retracement, remember your wave 4 targets, if this is a 1, 2, 3, your wave 4 targets are between the 382 or to the 0.5. And both of them have really good resistances as well. If we're looking at this as an A, B, and then a C, your C wave at the 1.236 is coming up to your daily, your naked daily, and your 0.5. So there, we've labeled this out already. The boxes of importance coming up here between like 59 and 59.5. And then you have a box, and actually this is like 59.44. And then you have a box here of resistance coming at like 61.9 to 62.6 with a confluence of resistance. And you even have some liquidity just above it at 63.4. But I don't like how we're grabbing liquidity from Wednesday's highs, and now we're dumping and losing the value area low. That is not a good sign here. Grab liquidity, lose the value area low. It makes it more likely that this is a corrective move and that we're going to come down and make new lows. Now, if you take out these lows, it even increases the probability that this is a 3-wave corrective move that's done with, and you're going to come down to make new lows. The bullish scenario, like I said, it has to be a 1, 2, 1, 2, and then you continue up. If you take out the lows at 53.44, it's going to invalidate a double 1, 2. You can't have a 1, 2, 1, and your secondary 2 goes lower than your first 2. So that is our invalidation for the double 1, 2 impulse, is taking out 53.44. All right, let me check Bitcoin real quick here. Yeah, essentially, guys, Bitcoin, I expect it to continue down because we lost the value area low. We came back up for a bearish back test, and it looks like we're rejecting. So I'm looking to come down and take out our double bottom lows at 62.2. Over the weekend, we might continue to grind, or we might form a range right underneath here for most of Saturday and then come down Sunday. Money flow doesn't look the best. 4-hour bear divs as we were coming up into this resistance. 4-hour bear divs, 4-hour bear divs. We bounced from the 786 Fibonacci yesterday, and it gave us a failed bounce. You can see yesterday we got a bounce from the 786. We weren't even able to break market structure bullishly, and now we're losing it. So in my opinion, it's highly likely that we do continue down. But I have alerts set. I'm looking for longs at 62.2 if we get the SFP. If not, I'm looking to come down to like 61K, where we have the golden pocket, we have our value area low, and we have some liquidity from that at 61,250, this liquidity. I mean, we do have liquidity above our 65.4K highs as well, but you can see that liquidity that's resting down in there. Right down into, well, this is liquidity from the 62.2 lows. So if we come down, we grab the liquidity from those lows, we might at least see a scalp long opportunity, a scalp to day trade long opportunity from 62.2. So like what I would expect is you're going to come down, SFP that, and then maybe make another move to back test that value area low again. And if you fail, I would expect to come down. Okay, guys, I do got to get going. I know you guys also wanted to look at some other altcoins. Steel and Stone, welcome in, man. We didn't cover ETH, but essentially ETH is just trading within this upper range within this buying exhaustion channel. I covered this earlier in the week, so we have our aggressive move up here. Now we're starting an exhaustion channel, but you're chopping. Just pay attention to this sideways range. ETH could come up to around 2100, you know, 2050 to 2100, because we broke out of this smaller range. You can pull your volume profile from the lows over, and you can see actually, wow, the value area high has changed. Hold on, let me make sure. Yeah, interesting. Your value area high has changed now. It's above us. And your POC is where we're at right now. So if you start to lose this channel, essentially if you start to lose the value area low of this smaller range right here, you're likely to dump down pretty aggressively to the value area low, which happens to be where your golden pocket is at 1670-ish. You would sweep all of this liquidity that built up in here. If we can hold in here, then you're likely to move up, and I would say you're going to continue moving up, take out this high, come up towards the top of the channel, maybe hit your daily, and then maybe see a pullback, and then come up into this zone. This is the big short. But essentially with Ethereum, because we started the move from the lows, this is not a double bottom, this is a higher low, but this initial move was a three-wave move. Unfortunately, on the higher time frames, it makes it more likely we take out 1505. Could we make it up to 2100 first? Yes. But it makes it more likely that this is going to be a larger sideways range, and eventually we dump down to take out 1505. Let's see. Sui is breaking our pitchfork. We were trying to hold it for a while, and we still kind of are in that range. So for Sui, you would be paying attention to two volume profiles. From the June lows of 2026, you're at the value area low right now, but we also have a smaller range in here. And just from July 27th on, you're losing the value area low of that range. It was also a weekly level, but you can see we're back testing it bearishly right now, and we're starting to reject. So because we're back testing it bearishly after grabbing liquidity, you had a small liquidity grab to back test your value area low. But if we reject here, you're now expecting to come out and take out this low or the range lows. And I still think we could come down to your macro support. I know this is a big ass support box here, but you can see we have the range lows here. Money flow looks pretty bearish. Yeah, you really, the fact that we came down to the bottom of this macro pitchfork. So let me just get rid of some of this here, because we looked for a long right there. We got the move up, but the initial move up from that long was, once again, just like Ethereum, a three-wave move. Meaning that this could be in a larger extended range before ultimately taking out, actually, never mind, sorry. We did take out the low after that three-wave move. So you had a three-wave move and then you took out the low like Bitcoin. That's a good thing. But on the more macro time frames, you're at the bottom of a very big pitchfork. And if you lose this pitchfork, and you can see we have not closed a weekly candle below the pitchfork. So the second we start closing a weekly candle below the pitchfork, we're in serious, serious trouble here. We need to hold this. Or if you're going to close below, you need to just come down to this box and then re-enter right away. Sui could be in a larger impulse to the downside. 1, 2, all of this could be a 3. You could see a 4 afterwards to backtest the pitchfork band, and then a 5 to take out these lows. You do have some very nice weekly bull divs, triple drive actually. Not yet. Sorry, not quite yet. If you take out the low that's resting around 65 cents, you would have triple drive of weekly bull divs, because you have a low here, and if you take it out one more time, you would create a third low. You would get that triple drive of bull divs. And you can see on NAMI, we already have a triple drive, but money flows leaving, and we're about to invalidate the local fourth drive of bull divs. It's hanging on by a thread. Doesn't look the best. Yeah, actually, what I'm going to do is I'm going to set an alert on this low at 65 cents, because if we SFP that, I would look for a long. Okay, and then Tau, I can look real quick at Tau. Yeah, essentially on Tau, we're in a sideways range as well. Hold on, let me just get rid of this. But we're rejecting from a golden pocket, and there was some liquidity there. We had a smaller sideways range that was developing for the last couple of weeks inside of here. So we essentially came up, grabbed the liquidity from that sideways range into a golden pocket. We're rejecting. But what we can even do is look at kind of our, I don't know if I want to include this move up. So I'm going to pull the range from this low over. Yeah, you're rejecting from value area high. You're coming down to POC right now. So if you lose the POC, you would expect to drop to the value area low, but it would be most likely there's a lot of choppy overlap in this move up here. 1, 2, 1, 2 is this. That would have to be another one because we have overlap between the highs and the lows. So it looks, this looks like a corrective move in here, and then we're about to drop down. In the bullish scenario, you're building a bunch of 1, 2s. 1, 2, 1, 2, 1, 2, and then you would get the big 3. But remember, in a multi 1, 2, you want your primary 1 and your primary 2 to be bigger than your secondary 1 and your secondary 2, and you would want it to be bigger than your trinary 1 and your trinary 2, and it's not happening that way. So it makes it far less probable that this is a multiple 1, 2 impulse that we're about to explode up from. It was also a golden pocket in here. If you pull a golden pocket from this high to this low, let me just, yeah, essentially, I do think that you're at your point of control. You might see a small move up from there, but I'm not expecting anything too big. You're at your point of control in golden pocket. So it is support for sure. Look at where your 786 is. Is that the value area low? This looks like some sort of running flat in here. So you have your initial move down, which does look like some sort of 1, 2, 3, 4, 5, some contracting diagonal in an A wave. Here's your running flat in a B wave. And then you would be looking for some sort of C wave in here. You're probably going to see a small bounce from this golden pocket, but I would look for a lower high and then a lower low, and I would look for another kind of contracting diagonal in here. And maybe you're going to get a bounce from the 786 and the value area low. I will actually set an alert on that because we might be able to, because there's internal liquidity resting here into that 786. But overall, I actually think, guys, we're going to come take out the lows. Okay. Show me your liquidities. Guys, I do have to get going. Let me see. Let me read the chat. Let me see if there's anything I'm missing here. BeamX. Man, I don't know if I've done TO on BeamX, so it would take me a while to do proper TA on it. But let me just look at kind of the overall structure and stuff, and I can maybe give you something here. I mean, it's bearish as hell, right? It's been in a downtrend. It's pretty much its entire life. After the crash that happened in October, you're still continuing a downtrend. You're pretty much making new lows. The one thing you could say here on BeamX is you have bearish market structure in here. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now you finally made a higher high by breaking this daily. By breaking this on the daily time frame, that lower high on the daily, that's a bullish market structure break. So you're starting to see your first signs of at least relief or some sign of strength. Now, because you broke that market structure bullishly, what you can do is you can pull a Fibonacci retracement from the lows to the highs, and you look between the golden pocket and the 786. Well, your golden pocket only gave you a little triangle consolidation. So let me zoom in here. You can see once you hit the golden pocket, you got this little triangle that formed in here, and then you broke it down. And remember, a triangle is a continuation consolidation pattern. What I don't like, though, is you just hit your 786 finally today. You come up to backtest that bearishly backtest the golden pocket, and you're rejecting here. That is a super bad sign, guys. Like, this thing just looks bearish AF, because look at, you hit your 786, you backtest, and you're dropping now aggressively still. So I see nothing bullish right now in this. Sure, you have some bull divs on the chart coming into the 786, but this harsh rejection from the bearish backtest of the golden pocket is not a bullish sign. I would really be looking for this thing to come down and take out the lows overall then. Like the lows at, what is that? 0012. Maybe you're going to consolidate for a bit in here over the weekend and then finally see a move up. But man, what I would pay attention to is the range. This sideways range right here. Okay, you're at the value area low. You hit the 786. This harsh wick that we're seeing on this last couple hours, you want to see, I would go to the 4-hour chart, and I would want to see this 4-hour next 4-hour candle not close red. You want it to continue green, to continue pushing up. You even have bearish market structure in all of this, right? Low, lower, high, lower, low, lower, high, lower, lower, you know, blah, 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 blah. So until you break this downtrend, there's nothing to consider for me. That means that you're going to have to break above the high that is at 0014. So you break that high, and then if you get a retracement, maybe you come up to the POC at 00144, then you get a retracement, then you could look for long on the retracement. But until then, there's nothing. Do you ever set an alarm to take a trade if it hits in the middle of the night? If a trade hits in the middle of the night and my alert goes off, 90% of the time I don't get up to do it. Sometimes if it's a big swing opportunity, I will set that alert. I will get up and I will look at it. But if it's just like my day-to-day trading where I'm setting alerts on, especially if it's like an altcoin, I won't get up to do it. But guys, I really do got to get going. I'm really sorry if I didn't get to your altcoin today. Remember, I stream Tuesdays, Thursdays, and Fridays. We can cover some more of the altcoins next week. We can cover Bitcoin and gold and silver, of course. Over the weekend, I will give you guys updates on the alerts and on Bitcoin. Remember, join the Telegram if you want to get those alerts. Deposit minimum deposit of $100. Click Telegram /verify in your user ID. Please do hit the like button if you got any sort of insight into the market from this live stream, guys. Appreciate each and every one of you. Thank you to all my mods. I really appreciate you guys all as well. And I will see you next week.